This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. It was raining heavily till last evening. For any school-going kids who are watching us, I mean, hurrah, I guess, right? I mean, schools are, they got one more day of holiday. Schools in Mumbai are shut, but I mean, on a more serious note, be safe. There's a fair bit of waterlogging in a lot of areas, etc. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, morning.
Morning. I don't think any school-going kids are going to be watching us. If they're getting a day off, they're going to be sleeping it out, right? But
indeed, but if the adults are, they're not going to work, then guys, just stay tuned to us. We'll do all the analysis for you.
And lots to do today, right? I mean, there's so many stocks in focus. There's, of course, Reliance and JFS post 9:30. There's HUL, Infosys that come out with numbers. And global markets have been pretty rock solid, so not too bad.
It's not bad at all, I mean, right? I mean, it's not been bad for a while. Markets looking pretty good. So let's just pick up from where we left off yesterday, and I'll quickly run you through what you need to know. So yesterday was another up day. And we've been kind of putting out these Bollinger Bands. I was just looking before I came in on what we put out day before yesterday, what we put out yesterday. And the momentum is so strong that in one day, you're basically getting to those levels. Yesterday looked quiet for the bulk of the day, but markets accelerated sharply in the last 40 minutes of trade. And, bulk of that acceleration came through in the Nifty. Bank Nifty was doing okay. It was up 0.5%. It ended about 0.5% higher. Mid caps and small caps ended, up as well. But the Nifty was sulking a little bit, but by close, that was corrected as well. So we left off on a pretty strong note once again. Now, overnight, you got US markets, which ended higher. It was more quieter session there. Not the 0.75 to 1% gain that we've become used to in the US as well, but strong nevertheless, a quarter higher. The dollar index has moved up a little bit, so keep an eye out on this one. But the point is the dollar index fell from almost 104 to under 100, right? So there is perhaps a little bit of, and has been meandering just under this 100 level for some time, and we are now slightly above 100. But in any case, that's an important marker, so keep that in eye. Keep an eye on that. The US 10-year yield is at about 3.74%, just in conjunction with where the dollar is. Now, as I said, because the markets have been moving and extending higher, the moving averages and consequently the Bollinger Bands are also extending. So the upper end of the daily Bollinger Band now stands at 19,960. We left off at 19,835. I mean, that's basically, so the upper end is, you can look at 19,960 or basically 20,000. That's the upside level that I think one needs to have in mind here as a reference point. On the Nifty Bank, what we saw yesterday was an inside bar, which means basically that the high and the low yesterday was within the high and low of day before yesterday. Day before yesterday, of course, we had a pretty large candle. Yesterday's high of 45,905 and the low at 45,281 will be important levels to kind of watch out for. If the lower level on the Nifty Bank, which is in some ways been the more vulnerable of the two sort of indices, if the lower end of the Nifty Bank breaks, which is 45,281, I mean, the next level would be 45,066. This is nothing but the 61.8% retracement of the recent rise that we saw, and that can be used as a bit of a positional support level. The big event, of course, which we will all be tracking, and I'll put out more details on this one in terms of how the mechanics will work out, is a demerger of Jio Financial Services out of Reliance Industries. So at 10 o'clock, you will basically know the price which the market is ascribing to Jio Financial Services, and of course what RIL is going to be trading at X this business, which is going to be quoted separately. Sonia.
Absolutely. So just, of course, this morning, the GIFT Nifty is indicating that the start will be mildly in the red, but some consolidation won't hurt anyone given the kind of cues that we've seen. This market has been exceptionally strong in the last many days, and the trend is definitely on the upside, although there are many, important cues to track. The global market setup has been very good. So the Dow, once again, 8th day running, the Dow has ended in the green. This is the longest winning streak that the Dow has seen since way back in September of 2019. So, we are not alone in this upward journey. But post-market hours, you had, in the US, you had Netflix that disappointed with its numbers. You had Tesla that disappointed with its numbers. In fact, Netflix shares were down 8% in after-hours trading. So just keep an eye out on the futures. There could be some pressure because of some disappointments coming in from these two. In our own markets, of course, record highs and 7th straight day of gains for our markets. Now, the Nifty, remember, has rallied 14% in just 3 months. So the run-up has been pretty steep. Some consolidation may be on the cards in the near future, given that we have important triggers like Infosys, HUL coming out with numbers as well. The buying continues from FII. So FI has bought over 1,100 crores in the cash markets yesterday. Almost 16,000 crores has come in the month of July alone. And, as Prashant was also pointing out, all eyes will be on that pre-opening call auction that happens with the GFS demerger later today. So 9 to 10 is when there will be price discovery. Then GFS will trade at a constant price, and Reliance Industries will settle at about 28.40 is the price of Reliance, minus the the settlement price of GFS. Reliance will trade at that post 10 a.m. So we'll of course keep talking about that, but that will be the big headline of today. Apart from that, Infosys HUL numbers today, but there are also many in the broader market. So you have Coforge, Emphasis, Havels, Persistent, and these are important because a lot of the mid-cap IT pack has come back in a big way in the last many days. So let's see whether there's positive news flow from here. But otherwise, it's been a rock-solid market, just that today, maybe there could be some, a cooling off.
Well, that's right, Sonia. You got the 3 big numbers that came in from the United States post-market hours, Tesla, IBM, as well as Netflix, and all those 3 stocks were lower in after-hours trading. So will that be a reason for the US markets to take a bit of a pause? Well, time will tell. From our perspective, the dollar index has strengthened a little bit. It's moved up a little above that 100-odd mark, so just keep an eye out on that front. But no two ways about it. The Indian markets, we have been seeing a strong trend in the upward direction. And yesterday, in the last 30 minutes or so, you had ITC and Reliance Industries. Both of them spiked up. Both of them went to the high point of the day. And that was one of the reasons why, in fact, the Nifty as well did make a big move in the last 30 minutes or so. In terms of trade setup, well, today is July 20th. Just around 4 months or so ago, that was on 20th of March, we were 3,000 points lower. So in a span of around 4 months, you've seen a 3,000-point rally on the Nifty, telling you the kind of rally that we have seen. The Nifty Bank as well, if the Nifty was up 3,000 points, the Nifty Bank is up more than 6,500 points in this duration itself. Now the Nifty has its eyes set on the 20,000 odd mark, but the Nifty Bank could face some bit of resistance at around 46,000 odd. And over the weekend, you have 2 big numbers, that's ICICI Bank as well as Kotak Mahindra Bank. Now, Infosys, that stock will be interesting to see how it reacts tomorrow because the numbers will come towards the end of market hours or just post-market hours. It's up close to around 10% in the last 1 week. You'll see how much of the good news is in the price. But actually, Infosys is an underperformer. It's underperformed the IT index in 2023 itself by close to around 10%. You look at Infosys, you look at the IT index, Infosys is still lower year to date, while the IT index is up close to around 10%. So that's a 12% underperformance that you're seeing out there. If they deliver a good set of numbers, let's see how the stock reacts. But the street is going in with some expectations on this one itself. The FI as well, yesterday they added some short positioning. As I always say, it's not such a bad thing. But the encouraging part is they wrote puts, and they wrote puts very, very aggressively. More than 1 lakh put contracts were written. And the strike that was very, very active yesterday was the 19,800 put, added close to around 85 lakh shares. The premium out there was around 36 rupees, and the total open interest is more than 1 crore shares. Looking at individual strikes, the 19,750, the 19,700 levels out there, both of them come up for you. And the PCR, that's a 3 to 4 times all, telling you that the bulls, they believe they have this market in control. So in support levels for the day, since today's weekly expiry, 19,750, if you want to buy, you look to buy closer to around that mark. Yes, we're going to see a 30-point downtick. And the move towards 20,000 is well and truly on, but maybe taking some money off the table, closer to around 20,000 odd, in this vicinity of around 19,800, 20,000, may not be such a bad thing. SGX Nifty is indicating, or the GIFT Nifty is indicating, a bit of a pullback to kickstart things.
All right, that's the GIFT Nifty with a 30-point downtick this morning. Well, let's quickly tell you what's lined up here in the first 30 minutes of the show before we go any further. Rajat Bhattacharya of Stancy will be joining us to discuss the global setup. Our team at CNBC-TV18 will get you the top 10 stocks for the day. At 8:30, Deepan Mehta will be joining in from Elixir Equities with a reaction to earnings which have come through post-markets yesterday and stocks that he wants to bet on.
Okay, so plenty happening in trade. But first up, as always, let's take you through some market opinion. On the equity side, you have Sanjay Mukim of JP Morgan who says they analyze 3 factors: earnings revision, valuation and price momentum trends for 80 customized industry clusters to identify potential mean reversion candidates in India. He says PSU banks, commercial vehicles, natural gas, upstream oil screened positively, while QSR, IT, aerospace, defense and durables appear to be at risk. He says in their India model portfolio, they add weight to Bank of Baroda, Tata Steel and GAIL and reduce SBI and Infosys. They add Cipla and Apollo Hospitals, while HDFC is removed from the portfolio on account of the merger with HDFC Bank. Sanjay says HDFC weight is adjusted to HDFC Bank.
Okay, let's get you some money market views as well. Parul Mittal Sinha of Standard Chartered Bank says that the USD INR has been consolidating in a tight range for several days now, even as FII inflows continue to provide strong tailwinds. She says the US dollar weakness remains a key theme, but US dollar purchases by local banks have prevented any major dip in the dollar INR. She expects the pair to trade between 81.75 to 82.25 over the next week, adding that the FOMC decision and statement next week will be an important monitorable.
All right, and on the bonds, Parul says the domestic markets continue the move lower post soft CPI print in the US. She expects the India 10-year benchmark bond yield to trade in a range of 7 to 7.15% amidst unfavorable near-term demand-supply dynamics. She says the key drivers would be movements in global yields, oil prices and domestic food prices. Next week is heavy on central bank meetings and hence rates are likely to remain range-bound till then, she adds.
Well, we have a lot of stock-specific action that we're going to be tracking for you. We'll get to that in just a bit from now, but let's run you through our top 10 list. Tata Communications, we have Canfin Homes, L&T Finance Holdings, Federal Bank, Hudson Agro, Finolex Industries and Dr. Reddy's. Well, they are stocks which will be reacting to positive news flow. On the flip side, you have Shree Cement, Krishna Diagnostics and Electra Green Tech that could be reacting to negative news flow.
Okay, well, Rajat Bhattacharya is now joining us. He's Senior Investment Strategist at Standard Chartered. Rajat, good to have you with us here. Thanks for your time. Is there anything on the horizon which could spoil the party, Rajat?
Morning. Glad to be here, Prashant. You mentioned in the stretched markets, right? So you talked about the US, India, and that is the issue here. But let's not forget what we've been through, right? The market and investors generally are rewarding growth. The three markets that stand out in the world today, US, Japan, and India. Now, think about it. That's basically three areas where the world sees growth. Funnily, I add Japan into it, but Japan is seeing actually turnaround in growth. And the last one I mentioned is India. Where else would you go today if you're looking for growth, right? So what happened since March, that turnaround since March, is that China's economy slowed down. After that post-pandemic bounce, it slowed down. And Europe started slowing. So obviously there is, there's a premium to growth here. And that is what the Indian markets are reacting to, the US markets are reacting to. Now, the key risk is the stretched investor positioning, and as you mentioned, this India market and the US markets are in the same place there. We look at fractals. It's a diversity indicator. It shows how diverse the views of investors are, and US and Indian markets are standing out there. So a bit of a consolidation here. But we can talk more about the long-term story. Structurally, as you know, we are very bullish on India.
Okay, structurally, you're very bullish on India. I guess that's what our viewers want to hear, right, Rajat? Because this has been a fabulous rally. I mean, the Nifty is up 14% in just 3 months. The ferocity of this rally, does it surprise you? And do you think we've reached euphoric levels just yet? Or do you see lots more on the upside, particularly for a market like India?
Well, that's where the structural story comes through. And there's a good piece of research that actually our India research team has come up with. And maybe you'll get some time to look at that going forward. But what they're really saying, I'll give you the highlights there. They expect, our India research team on the ground expects India to be a $6 trillion economy. India's 3.5, as you know. It's expected to be a $6 trillion economy by 2030. And that's primarily driven by domestic growth, organic growth, housing consumption. This is what we've been talking about for a long, long time, but they've put some numbers to it. Another metric, India is going to be the third largest economy by 2030. Third one is India's per capita income is going to be almost doubling actually to 4,000 US dollars by then. Now, that means India is going to be a middle income country. Market, as we said, this looks at this growth and is willing to pay that premium. We know that Indian stocks are trading at a premium. US is trading at a premium. Now, what's driving this and going forward, is this sustainable? To your question, the key reason is macro and political stability. And by that I mean the fiscal policy, the external situation in India, and then taking it forward, the policy reforms that have happened, and investors are seeing the benefits of that record tax haven revenues being spent in infrastructure going forward, right? And they have already seen the roads, the airports, and that is going to continue. And a few other things that are standing out is the healthy financial sector that we see. There was a big reform that happened 5 to 10 years ago, and as a result, the financial sector is pretty healthy. Corporate leverage is at its lowest since 2008. And then you have the story of the digitalization, which is creating efficiency in the economy. And then you have the large population, the working population, which is scarce. I mean, if you look around the world, obviously the population headwind everywhere else. India stands in contrast. So all of this together makes for a good structural story.
All right, Rajat, we are feeling good. Listening to all that you had to say, per capita income doubles. We move to $6 trillion odd. Do you think that the Indian markets can further re-rate from here? Because now we're closer to the upper end of the long-term averages. You factored in closer to 1,050 rupees of EPS in the coming years on the Nifty in the next 2 years. And we are at around 20 times. Do you think there is further scope for re-rating? Because as it is, we are at a big premium.
Yes, that is where the earnings growth story will come through, right? So India's been driven by the strong earnings growth, which is, again, scarcity, has a scarcity value in the world. And if these reforms that I talk about, if this macro stability, the political stability pulls through, and we see that going through in the next 5 to 10 years, yeah, I mean, there's scope for, not re-rating, but the earnings picture will come through. Then Indian markets could trade back to reasonable levels. But when you contrast India with what is happening in the rest of the world, and you see that, a good example to that is what China is going through. Their long-term growth is slowing. China is probably going to settle down into a 3-4% growth economy. India is pretty much in that 6-7% bracket, right? So there is always that premium that will come through.
All right. Well, we leave it at that. Raja, thanks a lot for joining in. Appreciate your thoughts here on CNBC TV18. So that's Standard Chartered saying that India is the place to be for an equity investor, especially a foreign investor, and that will continue in the times to come. Let's slip into a quick break. Lots of stocks to talk about, many numbers coming out today as well. All of that and more lined up on the other side. Stay with us. Well, it's a brand new day on Dalal Street. We've had solid gains under our belt. So let's get our research team to tell us about the stocks that you need to watch out for today. Tata Com came out with their numbers yesterday post-market hours. Reema's here to give us the latest on that. Reema, over to you.
Hi, thanks so much for that. It's a mixed bag. So the revenue growth is looking good for Tata Communications, but the margins have come in lower. On a consolidated basis, revenues are up 4.4% quarter-on-quarter, and on a year-on-year basis, revenues are in double digits, 10.7%. Their key segment, which they're focusing on, is the data. And here, the data revenue growth is sustaining, and it's looking up. So consolidated data revenue growth has gone up 17% on a year-on-year basis, aided by an acquisition that they did. But even if you strip that out, the Switch acquisition, organic data revenue growth at 14% on a year-on-year basis is higher than what we've seen, and it's sustaining in double digits. That's the key. Margins, as I said, though, have come under pressure. EBITDA margins in the current quarter are down nearly 120 basis points quarter-on-quarter, and the margins over the last 4 quarters, 3 quarters actually, have fallen from 25.5% now down to 21.4%. Their margins have been under pressure due to that Switch acquisition, the integration costs associated with it. Profits, though, are on the way up, 17% jump on a quarter-on-quarter basis, also aided by a higher other income. Back to you.
All right, Reema, thanks a lot for that. Well, let's hop across to Ekta. She is joining us to tell us about a couple of financial names which will be reacting to its numbers, namely Canfin Homes and L&T Finance Holdings. Ekta?
Thanks for that. Well, I'll start with Canfin Homes. I expect the stock to be in the green because the NII is up around 13.8%. It's better than expectations. The profit is up around 13% year-on-year. Again, better than expectations. The net interest margins have improved on a Q-on-Q basis. Gross NPA ratios have been stable. Morgan Stanley has written on Canfin they have an equal weight with the target price of 640. According to them, the profit beat estimates led by higher net interest margins and lower operating costs. L&T Finance, I expect that stock to be in the green as well. Net interest margins at an 8-year high. ROA has come in at a 14-quarter high of 2.13%. Gross NPA has been the best that we've seen in 7 to 8 years, according to Abhishek. So that's at around 4.04%. NII is up around close to 15%. Profit is up around 102.7% year-on-year, but it is up around 6% Q-on-Q. That's a better metric to track. Goldman Sachs has a buy with a target price of 110. According to them, they reported a strong Q1 both on quantum as well as quality.
Okay, in fact, Suresh Srinivasan Iyer, who is the MD and CEO of Canfin Homes, will be joining us today at 9:50 a.m. to discuss their Q1 performance, so do stay tuned in for that. But Federal Bank is also in focus this morning. Of course, it's been in focus for the last many days. Nimesh is here to give us the latest on that. Nimesh, over to you.
Hi, Sonia. Federal Bank will be in focus because of the QIP launch. So last evening, they've launched the QIP book. They're looking to raise 3,000 crores via QIP. Remember, they've already raised close to 1,000 crores via preferential issue to IFC. So net, through equity, they are raising close to 4,000 crores. Now, as far as QIP is concerned, I understand the demand is quite strong, both from domestic mutual funds as well as from some hedge funds as well. The indicative price suggests a 0 to close to 2% discount to yesterday's closing price. But given the strong demand to the QIP and the fact that they've raised money through IFC as well, I'll go with the green because the demand is quite strong and this was much anticipated. Remember, Abhishek had broken this story a couple of weeks back. So it was well anticipated, but the book is launched and there's a very strong demand in the QIP book.
Okay, we'll keep an eye out on that one, Nimesh. Thanks a lot for that. Well, Mangalam joins us to tell us about some earnings reactions that we got post-market close yesterday. Mangalam?
Well, I have 2 on my list, and both of them strong operational performance coming in. We start with Hatson Agro. In fact, the gross margins of the company improved by about 30 basis points year-on-year and 110 basis points quarter-on-quarter. Remember, we were struggling with high milk inflation same time last year, so some improvements seen there. EBITDA margins on the back of that up 220 basis points. The company did some belt tightening as well. The operational expenses were down by about 5% as a result of which the EBITDA for the company grew by 33% and the net profit by 54% itself, despite revenues growing just about 7%. The other one is Finolex Industries. Again, out here as well, the revenues were flat, down almost 1%, but we had the EBITDA jump by 21%, implying a near 250 basis points improvement in their margins, and as a result of which the net profit for the company too jumped in mid-teens, almost 16% higher there. See green on both stocks.
Okay, Mangalam, thanks very much for that. We got more stocks with news flow. Ekta is here with that. Ekta, good morning.
Thanks for that. Well, I'll start with Shree Cement. I expect the stock to be in the red. They've received a letter for inspection from the MCA. Krishna Diagnostics, I expect that stock to be in under pressure as well, as the National Health Mission Rajasthan has cancelled a letter of acceptance for providing lab services. So basically there's been a tender which is cancelled from the state of Rajasthan for Krishna Diagnostics. Electra Green Tech, they've been awarded 395 crore contract to Mega Engineering and Infrastructure. It is for construction of greenfield EV manufacturing facility in Hyderabad. But the catch is that Mega Engineering and Infra is the ultimate holding company, and this is a related party transaction. Lastly, Dr. Reddy's, I expect this stock to be in the green on account of the USFDA completing a PAI and routine GMP inspection of their Srikakulam facility. 0 observations. They've received a no action indicated status from the USFDA, which is definitely a positive.
All right, thanks a lot, Ekta, for that. Here's a quick recap of our top stocks. Stocks with positive news flow: the Tata Communications, Canfin Homes, L&T Finance Holdings, Federal Bank, Hatsun Agro Product, Finolex Industries and Dr. Reddy's. While stocks with negative news flow: the Shree Cement, Krishna Diagnostics and Electra Green Tech. Let's also get a quick handle on what's happening in the world of commodities this morning. Manisha Gupta joins in for a roundup of all the action there. Manisha, good morning.
Morning, Sonia. Thank you for that. I'll start with the fact that the markets are still staring at a lack of China stimulus, and that seems to be weighing on. Add to that the fact that you also have seen a strong rebound in the dollar index. We're almost above 100 right now, and that's weighing on to the commodity markets. For the crude oil prices, the pain also comes in from the fact that you have seen U.S. inventories decline less than what the street was anticipating, and there actually is an inventory gain when you look at distillates and gasoline. So clearly the demand for crude and products continues to be on the weaker side. Metals also have continued to decline. Overnight, we saw 1 to 1.5% of a cut come in for copper, zinc and aluminum. That is again because China today yet again has kept its 1-year and 5-year prime lending rates at stable. When you look at the agriculture commodities, well, that is where the major action was. Russia warning on ships in Black Sea as potential military target has led to wheat prices surging 8% overnight. You've seen corn trading at a 3-week high, soybean prices running to a 3-month high, and the list goes on. So most of the agriculture commodities are the major gainers today.
All right, thanks a lot for that, Manisha. Well, let's slip into a quick break. On the other side of the break, we'll tell you everything that you need to know about the Jio Financial demerger from Reliance Industries that will happen today. So all that coming up in a bit. Later, Dipan Mehta of Elixir Equities will join in for a fundamental stock analysis. We'll also have Mahesh Palawat of SkyMet Weather Services and RK Jinamani of IMD to talk about the monsoon mayhem that continues to sweep the country. More on that coming up in a bit.
Welcome back. Hope you're having a good morning. Well, the big event today is going to be the demerger of Jio Financial Services from Reliance Industries. That'll be concluded later today. Prashant's gone across to the big ball to tell us all that we need to know. Prashant.
I mean, it's going to be a big one, right? How often do we see a business being spun out of the largest private sector company in the country? So I think it'll be closely watched in that sense. Now, this is basically just to tell you the mechanics of really how this is going to work. By the way, this is going to happen between 9 and 10 this morning. The exchanges, to begin with, will run a special pre-open price discovery session. That's going to be between 9 and 10 this morning. This is basically because Jio Financial is being separated out of RIL as a different entity. So we need to know, ex-Jio Financial, what are people willing to pay for Reliance Industries? That is what this 9 to 10 a.m. session is all about. Now, the overall market will open as usual at 9:15 a.m., but with one difference. Reliance Industries stock price will not change in the Nifty or anywhere else for that matter till 10 a.m. So, for all practical purposes, between 9:15 and 10 a.m., there'll be 49 stocks trading, not 50. Reliance Industries will quote at a fixed price in this period between 9:15 and 10, at yesterday's closing price, with the volume-weighted closing price of 2,842 a share. The price discovery session will be over. I mean, actually, between 9:45 and 9:55 typically is when this happens. It's like any other sort of call auction session. We have one between 9 and 9:08 every morning. So this will get over. We'll get the price between 9:45 and 9:55. At 10 o'clock, we basically will have Reliance Industries, which will start to trade ex-Jio Financial Services. Remember, futures and options contracts which expired yesterday will also start trading for Reliance Industries at 10 a.m. when the underlying starts trading. The price or the value of Jio Financial Services will be taken as the difference between RIL's closing price yesterday, which is that 2842 number, minus the discovered price of Reliance in the pre-open price discovery session, whatever we get it between 9:45 and 9:55. Now, Jio Financial will be included, not quoted. It won't be traded, but it will be included in the index, the Nifty and other indices, but Nifty is the big important one, at the fixed price, whatever that sort of discovered price is, the found price is. So in that sense, Jio Financial will be the 51st stock on the Nifty index, but this is only going to be temporary. Jio Financial will be removed from the indices 3 days after it lists. Now, we don't know the listing date, but for the time period between now and whenever the actual listing of Jio Financial will be, Jio Financial will be included, will be part of the Nifty index at that fixed price, which we will know later in about, an hour or so. So get ready, I guess, for a demerged Reliance Industries and the newest kid in the block, which is Jio Financial Services. We actually have Deepan Mehta joining in, director at Elixir Equities. Deepan, good morning. Great to have you with us here. Thank you very much for your time. You're a long-time Reliance Industries watcher. The pace of monetization is picking up. I mean, we had something in terms of Reliance Retail where they bought back shares which they did not already own in that business. We have Jio Financial Services now. We've got the AGM, which is listed for, in a few weeks from now. How are you looking at this event? And what does this mean for shareholders of Reliance if they already own the share or are they thinking of buying it? Your thoughts?
Good morning, Prashant, and thank you for having me on your show. I think I'm seeing this thing for the first time in my life as well. This sort of a mechanism being put into place for the adjustment in the index and really looking forward to how it actually plays out. I think it's a growing maturity of our market that we're able to handle such complex transactions. And the way the Reliance stock price has moved over the past few trading sessions, I think the market is sending a clear signal to the company that this should be the way that they should unlock value for the larger businesses, that is the technology business and the retail business. And if this is successful in terms of value creation for Reliance Industry shareholders and Jio Financial shareholders, then maybe the management will look at a similar kind of a corporate action program for the other two large businesses. And I'm hopeful on that count. But on the whole, I think, if such kind of spin-offs are going to be the way forward, then Reliance Industry certainly has a long way to go in terms of upsides. And maybe, some of the issues with investing in Reliance as a conglomerate, they will no longer appear if the three companies within Reliance Industries are traded separately.
Okay, Dipan, hi, good morning. I have a two-part question here. One for the here and now, right? I mean, what are you expecting in terms of the price discovery post 10 a.m. today on Reliance and on JFS? And two, given that you have the earnings of Reliance tomorrow, I agree that the consumer businesses are doing very well, but on the flip side, the O2C business is struggling a bit. There's some weakness there. How do you tie all of that into the stock price, and what's your expectation?
Yeah, see, so that's the complexity of Reliance Industries, that there are just too many moving parts. And, while one or two divisions do well, the others do take a hit. So that kind of, limits the kind of upside that one can expect in the stock. Oil to chemical business, we know, is cyclical. It has had excellent quarters in the past, and maybe we should look forward to a softer one this time. But at least technology and retail are secular growth stories. So from that point of view, their proportion within the overall consolidated numbers should gradually keep on increasing and provide more stability to the earnings of Reliance Industries. Coming to the stock price, I think, your channel as well as a lot of analysts have projected the price of Jio Finance between 150 and 200. I think it'll be on the higher side, maybe around 200 thereabout, because when such spin-offs do take place and the kind of story that is there behind Jio Finance and what the kind of prospects which are there and the kind of play which is there on the retail lending side for Jio Finance, I think that's enormous. So from that point of view, I think we should see a lesser discount than expected in Reliance Industries when the price is discovered, and a higher price in Jio Finance beyond the discounted, the difference between yesterday's close and today's pre-open.
Hi, Dipan. Good morning. As you said, it's the first time this is happening, so we're all at par, right? Dipan, for so many years we've been talking. You tell me, Naisha, you don't know what happened in the mid-2000s, the early 2000s. Well, this is the first time, so we're both on par. So we'll both be experiencing this event for the first time. So we'll wait by for that. But Dipan, let's talk about a couple of other big names. Infosys, that's the big one that comes out with a set of numbers. At the start of the show, we're making this point that that's one of the only large-cap IT names that are still year-to-date lower. The IT index is up close to around 10%. How much of the good news is already in the price, and how do you approach the stock from here?
See, Nigel, I am a bit surprised with the way the IT stock prices have moved up higher. A lot of them are trading at all-time highs or 52-week highs, and that is despite generally everybody being aware that this quarter and the next 2-3 quarters will be soft for the IT industry. So I think it's just a positive sentimental effect of US tech stock which is playing out on Indian IT companies. Or maybe the street knows something which the analysts and the fund managers are not aware of, because we are seeing lower projections, forecasts for the IT sector as a whole, and yet stock prices are not showing any signs of correction. So maybe the longer term prospects of what are being priced in at this point of time. But I think that optically also, if you see the news flow coming from US is gradually getting better. Bank profits over there are at all-time highs. Big tech also stock prices are at all-time highs, and maybe the kind of fear which was there about the economy be going into a further deeper correction, those seem to be unfounded, and we may see tech spending also come back maybe 6-12 months down the line. So maybe all of these things are playing into it, but at this point of time, honestly, I'm not looking at buying any tech stocks. I want this uncertainty to get over and done with, and I don't mind if I miss out on the first 5-10% up move. But I want to have that certainty that the worst is over for the tech sector.
Okay, all right. Let's just get a quick handle on what's happening with the monsoons as well. Dipan, request you to just stay on and listen in. We'll come back to you for more. The downpour continues in several states with flood-like situation in many areas of Maharashtra and Gujarat. In fact, the IMD has issued an orange alert for Mumbai and adjoining areas, and the government has ordered the schools to be shut. Mahesh Palawat, the Vice President of the Met Department and Climate Change at SkyMet Weather Services, and R.K. Janamani, the Senior Scientist at IMD, joins us now to talk more about that. Mr. Palawat, first, if you can just, tell us what is the situation at the moment. The IMD has issued that yellow alert in Mumbai as of today as well. But in several states, what are you expecting?
See, already Mumbai has recorded heavy to very heavy downpour. Particularly if you see Dahanu, it has already recorded 296 mm rain until 0530 hours today, and 91 millimeter was recorded by Santa Cruz. So now the intensity of rain is expected to go down over Mumbai and suburbs. However, moderate showers with 1 or 2 intense spells may continue, and the situation will start improving from tomorrow onward. But if you see the larger picture, then the southern districts of Gujarat may receive heavy to very heavy rain for another 2 days. And intensity of rain will be heavy over North Madhya Maharashtra, Vidarbha, parts of Telangana, Chhattisgarh, South MP, and parts of, we can say, North Coastal Andhra Pradesh and South Odisha. Across central parts of the country, rain will be heavy, and one after another low pressure areas, or you can say a cyclonic circulation, will develop over North Bay of Bengal. They will have a tendency to travel in westerly direction across central parts of the country. However, the Indo-Gangetic plain, right from Punjab, Haryana, Delhi, Uttar Pradesh, Bihar, Jharkhand, and West Bengal. These areas will have only light rain, or we can say almost dry weather condition for at least next 3 to 4 days. Yeah.
Okay, I think that is a big relief, right? Dry weather conditions in the north. So rains are expected to moderate in the Mumbai region. Mr. Janamani is also with us. Mr. Janamani, the fury that we saw in terms of the monsoons in the northern belt, right? Do you think the worst is over on that front, and what are you expecting? Mr. Janamani, is my voice reaching you?
Okay, I think we'll try to get him back on the line. Mr. Palawat, I want to ask you, given the kind of rains that we have seen in July, how much of the deficit of June has been made up as of now?
I do not have exact data, but yes, the July is, if you see overall picture of entire country, then it is, it has already covered the deficit of June, which was, June ended with a deficit of 10%, and now the All India rain statistics is 0-0. No deficiency, no surplus. So we can say the July has recorded more than average rainfall, because it has already covered the deficit of June. And now also picture seems to be very good in terms of rainfall across the country. And the July may witness more than average rainfall throughout the end of the month. And however, the impact of El Nino is expected to take place, or you can say its impact will be seen or will be visible in the month of August and September. And rain during month of August and September may be below normal, but there is no need to worry for, because one after another spell will continue. However, there may be some deficiency over eastern parts of the country, South Peninsula and Northwest India in the month of August. Yeah.
Gentlemen, good morning. Mr. Janamani is also with us from IMD. Mr. Janamani, good morning. Good to have you here.
Good morning. Good morning.
Hopefully you heard what Mr. Palawat was saying. Would you say that overall, in terms of sheer big numbers, the deficiency is now wiped out, as Mr. Palawat said? But, huge kind of spatial differences, right? In terms of distribution, sorry. As Mr. Palawat was saying, east and south deficiency is pretty large. What does this mean for acreage, land under crops, sowing, and eventually food prices down the line? I mean, if you can take us through that.
Yeah, I must tell that the update figure till yesterday is that plus 2% is the all India rainfall till 19 July. And if you take the July alone, it is plus 13%, already excess. So we don't see any signature of El Nino or any other thing. It's only rain and rain, Northwest India, and you have seen the way Gujarat has come also. So looking down the line overall, some deficiency is there, particularly the southeast peninsula covering the Telangana and Andhra Pradesh, something like that. But Odisha, Chhattisgarh has made up already, normal. Bihar and Uttar Pradesh has some issue. But as the trend indicates, we will have an active monsoon for next 3 to 4 days for central India and west coast. But rain has reduced actually compared to day before yesterday. Yesterday some reduction has been there, mainly Gujarat. While Mumbai continued to get the very heavy rainfall, we have stations like Chimbur and others reporting 150 millimeters. So we have orange alert still over Mumbai.
Okay,
Yeah.
so the rain has reduced in some of the northern part of India. Got that. Mr. Palava, just before we let you go, same question to you. What has the overall spread of the rainfall been so far compared to what we've seen historically? Because, you know, as we know, the distribution, I guess, is much more important than what the aggregate precipitation is. So how has the overall spread been so far?
See, overall, we have seen the northwest India is rain surplus. Most of the states of northwest India, right from Punjab, Haryana, hills of western Himalayas, and Rajasthan, Madhya Pradesh, these states are rain surplus. However, rain is still deficient over Bihar, Jharkhand, West Bengal, and Tamil Nadu, Andhra Pradesh, Telangana, Kerala. All these areas are rain deficient. But picture seems to be very good in terms of rainfall for another, say, 10 days. Until end of July, we think that rain will be sufficient over central parts of the country, and northwest India will also receive a decent amount of rainfall. And now rain activities are also expected to increase over Bihar, Jharkhand, and West Bengal in coming days, say from 24 or 25th onward, as the axis of monsoon trough will start traveling to Indo-Gangetic plain. So, but yes, the Kerala and Tamil Nadu, Andhra Pradesh, and southern parts of Telangana may experience some deficient rain in coming days also. But overall, rain activities over entire country will be as we can say normal. Average rainfall will be covered day to day on day-to-day basis. However, there may be some deficiency in the coming month, like August. We have to wait and see. But there is no need to panic for, particularly for farming community. We do not expect any significant drought-like condition, or you can say a dry weather condition for prolonged dry spell over any part of the country.
Okay, all right, gentlemen, thanks a lot for joining in. We've run out of time, but thank you for giving us an update on all that's been happening on the monsoon front. Stay safe, everyone. There is an orange alert across Maharashtra, and for Mumbai particularly, a yellow alert by the IMD. Let's slip into a quick break. On the other side of the break, Anuj Singhal joins in for a quick trade setup. Post that, we'll bring you the top stock picks for the day from our technical and F&O experts.
Okay, welcome back. We've got, 9 minutes to go for the pre-open session, 9 minutes to go for the beginning of the special price discovery session for Reliance Industries as well. I think we can add that to the commentary this morning. But Anuj is here in the studios to run us through what he's making of the price action and, the way forward. Anuj, morning.
Morning, Prashant. Well, it's been such a bullish market. Every morning I run a scanner on the FNO stocks to arrive at a few stocks which could look good. And yesterday evening, when I ran that scanner, this is what came out. 66 FNO stocks are showing bullish signs, 0 bearish signs. So it tells you the kind of market that we have. Extremely overbought market, of course. 200 BSE stocks at new high and 32 at new low. This number is still reasonable. This number has to go to 500, 600 for you to get really exuberant about the market. So we're in overbought territory, not yet in exuberance territory. Now, today there's a Nifty versus Bank Nifty angle which will play out, and I'll tell you why. Because Nifty has 3 angles today. First of all, there will be no contribution of Reliance from 9:15 to 10 a.m. After that, Reliance will start trading, and 10 to 11 will be interesting because those who only want Jio perhaps might want to sell. So that will be interesting. Post-noon, the focus will be on Hindustan Unilever because the numbers normally come out around 132. So that's where your focus will be. And of course, last hour would be about Infosys. You would want to sort of preempt Infosys' numbers. So in that sense, Bank Nifty is perhaps a cleaner play today because it does not have any of these 3. And that, I think, is also looking much cleaner chart as well. Talking about Nifty, the first resistance is at 19,851, which is yesterday's high. Then, of course, the bigger resistance based on options data, because today's weekly expiry is 19,876 to 19,902. Support lies in at 19,775, again going by options, and bigger support is yesterday's low around 19,725. So what you've got to do is perhaps play this range smartly, 19,775 to 19,875, and if the range breaks, then you take a trade in that direction. The Bank Nifty, as I said, is showing signs of ending its underperformance for last few days. The first support over here is at 45,430 to 45,500, which is based on options, and of course, yesterday's low, or the bigger breakout zone of 45,100 to 45,200 is your bigger support. Resistance comes in first at 45,725, which is around yesterday's high, and the bigger resistance is 45,900 to around 46,000. That's options based. Also, keep in mind 45,905 is also the prevailing record high on the Bank Nifty. But as I said, perhaps Bank Nifty offers a much cleaner play than Nifty, at least for the day.
Okay. All right, Anuj, thanks a lot for that. Well, let's get in our technical experts. We have Mitesh Thakkar as well as Sudarshan Sukhani who join us for a quick chat. Good morning, gentlemen. Mitesh, yesterday we were at closing bell, we were chatting, and we had a good finish to the trading session. How would you approach trade today, given that the implied start could be a 30-40 point downtick?
We had a very strong finish to the last hour session yesterday, Nigel. Good morning. And I think, that only suggests that the momentum is good. But my only worry now is as we keep getting higher, and we've been making higher highs on the hourly chart for the last 5-6 days, we're getting overbought as well. So I think a good idea would be to figure out a stop loss level which you would want to keep as your trading long for your trading long positions. And to me, I think it will be around 19,730, 720 zone. So I think if we are above that on the spot Nifty, I think we will look at 19,950, 20,000 as the range where I would want to take some profits off and then wait and watch from there and see how the market is able to deal with the important round number at 20,000. But yeah, I think that's the way we'll approach. On the Bank Nifty, I think, the good thing is that we have again started getting past 45,500. So we could attempt 46,000. And once we get past that, I'll look at 46,400 as the next target area. But for the timing, 46,000 is my immediate target.
All right. Sudarshan Sukhani is also with us. Sudarshan, morning. What's the sense you're getting about the market?
Yeah, good morning, Sonia. There's only one trade in the market, and I think both of us know it. The market makes new highs. You want to buy every dip you can, and you are going to get an intraday dip today. But now, as I've told earlier, 20,000 is a psychological number. That number should not act as resistance. It should act at least as a pause. So as the Nifty reaches 20,000, short-term traders may consider taking profits and then waiting for those inevitable dips to re-enter. So 20,000 is a place where you want to take profits and plan for re-entries on dips. At the cut today, the chances are we'll get a dip, an intraday decline because of various fundamental reasons, and you have to buy that decline. The Bank Nifty, despite having a narrow inside day yesterday, suggests that it is willing to participate in the Nifty together with the Nifty. So the Bank Nifty is a buy without looking at a dip. You could just go and buy it.
Okay, what about individual stocks, Sudarshan? What are you looking at this morning?
Well, I have one intraday short, and that is LIC Housing Finance. LIC Housing Finance has been falling. You know, anything that falls in this bull market is not very good. It's not bullish. So you can consider an intraday short with a stop of 394. Essentially, there is a lot of buying opportunities even at elevated levels. So we have M&M. M&M has had a decent rally, a small consolidation. That consolidation should break on the upside, stop under 1500. Then we have Sun Pharma. Sun Pharma made new highs yesterday. So you want to wait for an intraday dip in the session today to actually go long in Sun Pharma. But that whenever you find a small consolidation or a decline, go long there. New highs are essentially bullish. So Sun Pharma is a buy. It's a positional buy also with a stop under 1050. And finally, Trent, a stock that rarely comes in our lists, but it's in the F&O segment. Trent had a decent correction, and it's probably resuming its up move after that correction. That's a buy with a stop under 1650.
Okay. Gentlemen, good to get that view, and appreciate you joining in. Okay, I think Mitesh is yet to run us through with what he wants to trade. Mitesh, hi. Good morning. What do you have?
Morning, Prashant. I have all buy calls today. The PSU banks picked up in the last hour, so Canara Bank could see some follow-through buying here. Keep a stop below 333, look for 351 as the target area. Sun Pharma is a buy as well. A stop below 1069 is what I recommend, and a target of 1110. Also a buy on Indian Hotels with a stop at 394 for targets of 417. And amongst the IT names, Emphasis is a buy with a stop below 2145 for targets of 2225.
All right, let's take a quick break on that note. On the other side of the break, we'll get more about the markets, the pre-opening rates. We'll also have Digant Hare of GreenEdge Wealth Services to talk about Jio Financial, the demerger, and more details on how to approach that. Stay tuned. Welcome back. You're watching Bazaar live from the CNBC-TV18 Motilal Oswal studio. We're heading into a brand new morning of trade, and just a while from now, we will find out, we'll have the price discovery of Reliance Industries. I think in the pre-opening session, it's expected to kick in right now, so we'll just talk about that in a bit. But in the meantime,
Sonia, just take a quick look at where Reliance is, if you can have this up, because the session is starting at 9. The base price basically for this is the closing yesterday, which is 28.42 roughly. Do we have the first rates on Reliance in the pre-open? I don't think that is.
There'll be a pre-open rate, so we'll not get the rates. I think till 9:45 odd we'll get.
I'm not sure. We'll because in the Nifty pre-open in the morning, we get the
but this is the special window, I think so. Like how we have for an IPO, I think so. So like you get the rate ultimately only by 9:45 odd, and it starts trading at around 10 a.m.
Yeah.
So I think it'll be in that manner.
So we'll perhaps have to wait.
I was hoping we'll be able to see the the back and forth in the book build in that sense, but maybe straight at 9:45.
Okay, we won't have to wait too long. So in the meantime, let's talk about some other stocks as well. Chandan Taparia, derivative and technical analyst at Motilal Oswal Financial Services, is with us. Chandan, hi, good morning. What's the sense you're getting about the market? Do you think this uptrend is intact? And what are the stocks to watch today?
Yeah, good morning, Sonia, Nigel and Prashant. Yes, the uptrend is intact in the market. We have seen decent run up. The Nifty index is continuously forming higher highs on the weekly scale from last 16 weeks, and supports are gradually shifting higher. Even on the daily scale, we are making higher highs, higher lows from last 5 trading session, and base of the market is shifting higher. So now, for immediate point of view, Nifty has support near to 19,730 marks. Until it holds, momentum could extend to us 20,000 plus level. Positional point of view, till it holds about 19,550, we are looking this rally to extend to us 20,200. So trend and momentum is intact, and we are suggesting to continue with long position by trailing support and driving this next leg of rally in the market. Similarly, if you talk about the Bank Nifty index, yesterday we have seen some consolidation, but 2 days back, it made the new lifetime high of 45,905. base of the Bank Nifty is shifting higher. We have support near to 45,250. And with this support, this momentum can accelerate towards 46,250 level on the higher side. Now, looking at the stock wise, recommending to buy on Indian Hotel. This stock has been holding the multiple support near to 378, 380 zone from last 7 weeks on the weekly chart. And yesterday, it has given a decisive close above 400 with consolidation breakout of last 25-30 trading session. So expecting fresh leg of rally railed by short covering as we are heading towards the expiry month and expiry week. So recommending to buy Indian Hotel with a stop loss of 392. The stock can head towards 415 levels. Second trading area, that is buy on Bazaar Finance. We have seen bottom out approach on the lower time frame. Multiple supports are visible on the daily chart near to 7400 level. So recommending to buy with support of 7430. The stock has potential to rally towards 7900 to 7950 level. Last trading area, that is from banking and PSU banks, that is buy on Canara Bank. We have seen support based buying in the stock. Momentum is shifting upwards. Base of the stock is shifting higher. We have seen buying interest in PSU banks, and short covering and the put writing also indicates for fresh up move in the stock. So recommending to buy on Canara Bank with a stop loss of 332. The stock has potential to rally towards 353 levels.
Okay, well, thanks very much, Anand, for that. Appreciate it as always. I think we are starting to get the pre-open rates on the Reliance Industries stock, adjusted stock, and there you have it. That's down 150 rupees, which basically means it's at 2691, which basically means that the difference that you're seeing on your screen is the implied value for Jio Financial Services. It's down 5%, which means 149 is the implied value, because the change is yesterday's close, which is 2842. So the difference is on your screen, and that is the implied value for Jio Financial. But the process has just started, but it'll run all the way till 9:40. It'll run, of course, all the way till 10. But even this 1 hour session is split into three areas. 9 to 9:45 is when you can put in orders, you can modify orders, etc. 9:45 to 9:55 is when the price discovery will happen. All the orders will be sort of tabulated, brought together. The discovered price will be found, and trade confirmations will be given. And at 10 o'clock, the trade will start. The actual trade on Reliance will start. So that is what is coming through. 2650 on Reliance in the special pre-open session. Remember, the Nifty that you are seeing, the Nifty pre-open that you're seeing, that has got no impact of this change of the 2650 price that you're seeing on the Nifty. If you can have the Nifty pre-open up on your screen, there is no impact of the 6% drop in Reliance. This is just adjusting for Jio Financial's value. People are finding it. There are buy and sell orders coming, and eventually at the end of this session, we will have a price. But on the Nifty, there is no impact. Reliance, to calculate this Nifty, all the way till 10 o'clock, Reliance price will be taken fixed at the 2842 level, which is where it closed yesterday evening. So I think that's the mechanics of how this is basically going to work. The first time this is happening under this framework, and it's a pretty interesting one at that. The reason for doing this is simple, is because if you let Reliance influence the price on the Nifty, of course, first of all, the impact will be pretty large if you do it live on the index and let it all adjust. And second is ETFs, passive funds, index funds, they will have very large tracking errors. So to reduce that, you having this as a separate pre-open session, and that is also the reason why Reliance, will remain the Jio Financial value, whatever the value is, that will be included in the Nifty at that price, fixed for a period of time till Jio Financial Services actually lists on the index at a future given date. We don't know the date as of yet. So we'll keep an eye on this one. I think we're at the end of the Nifty pre-open session. It is indicating a slightly lower kind of start. And the Reliance special pre-open, the call auction session, the price discovery session, that will continue all the way till, we'll get a price between 945 and 955. Sonia.
Okay, well, a couple of more stocks in pre-opening, actually. The pre-opening levels have settled absolutely flat, but a couple of stocks do deserve mention. Canfin Homes reported a very strong set of numbers this time. NII growth of 14%, profits up 13%. So Canfin Homes in pre-opening is reacting, now settled down about 1%. L&T Finance, very strong set of numbers as well. Net interest margins at an 8-year high. And in pre-opening, L&T Finance is up almost about 3.5%, so keep that on your radar. And Federal Bank has launched that QIP of over 3,000 crores. The demand has been very strong for that, as Nimesh was telling us earlier. So Federal Bank is trading in the green. But let's put the focus back on Jio Financial and the demerger. Of course, the eventual aim is value unlocking for shareholders, demerging the entity and then listing it. Digant Arya, the co-founder at GreenEdge Wealth Services, is joining us to talk more about that. Digant, the larger theme is the expectation is that JFS will be a big threat to the industry on the whole, with its sort of feet in many pies, so to speak, whether it's lending, etc. But tell us a little bit about what your valuations are. How do you think the demerged entity could shape up in terms of, the book size as well as the growth here on?
Hi, Sonia. Good morning, and thank you for having me here. See, Jio Financial, as of today, there is very little business inside the company. Okay, we are all getting excited because they have, they just have a net worth of 6,000 crores, and they have shares of Reliance Industries, which if all of them are sold, you can have a starting net worth of 1 lakh crores. So there's a lot of hype that, okay, because it is going to have a 1 lakh crore net worth, it can go ahead and easily build a 5 lakh crore kind of a book and, disrupt the whole industry. I don't think any of that is going to happen. People just say that Bajaj Finance is under threat, this and that. See, we have to understand that Jio Financial Services, when it comes to the financial services business, there are really good, strong players everywhere. Okay, in the prime personal loan space, we have all the banks. In the non-prime personal loan space, we have the Bajaj Finances of the world, which are very strong. Then when we come to, the blue-collared personal loans, we have the Paytms of the world doing a phenomenal business out there. So I think financial services lending is not a space where there is a red carpet waiting for Jio Financial Services. They will have to go through the grind of tuning their algorithms, deciding whom to lend, how much to lend, collecting money. It's all a very, very operational and a process-oriented job. And if Jio Financial really has to create a lot of value, I think it is 4 or 5 years of a lot of hard work. I don't see any immediate threat to a Bajaj Finance just because, Jio Retail will have more than 2 crore customers. It's not easy. I think Jio Retail just fired some 15,000-20,000 people a few weeks back because, their retail format, a lot of rejigging is happening in their own retail formats. So that's my starting comment. I think valuing the company on 1 lakh crore book today itself will be a far stretch. Something less than 1 lakh crore of market cap is where I would expect Jio to settle.
Okay, all right, Digant, but the street believes that maybe there'll be a bit of a threat through Bajaj Finance. So if that's the case, will you look to be getting into Bajaj Finance because of the news flow?
Not really. See, Bajaj Finance itself, like we've discussed a number of times on our channel, that Bajaj Finance was the champion of the lending in the physical world. So from 2018 onwards, Bajaj Finance is trying very hard to also establish itself in the online or the internet world. There, obviously, it is not the number one player, and which is why I think, that whole transition is still playing out. So, honestly, Bajaj Finance itself has some more time before, we can resolutely say that, okay, Bajaj Finance is as strong a player in the online space as it was in the last decade in the offline space. So I think, we should just let this event pass, see what Jio does. I think independently, Bajaj Finance is reasonably valued now. We are not going to see the stock price returns or the growth rates in loan book and profits that we saw in the last decade. So I think my optimism for both of them is quite tempered. Not to say that they are not good businesses. Bajaj Finance is an excellent business. Jio Financial Services yet has to prove. They have the management, the brand, the captive customers, but they still have to lend and figure out a profitable business model.
Digant, good morning. Pretty sensible way of thinking about things. So nothing at this point, right? But markets are known to discount the future in that sense. And Reliance is not known to do anything at a small scale. Telecom is an example. I know. All very different industries, number of players, healthy players. It already had very weak players when Jio came in, number of weaker players, which is not the case here in banking. But beyond banking, you think they they'll have big plans in other allied financial services industries as well, insurance for one?
See, I think, again, being a manufacturer, India has almost 48 companies who manufacture insurance products. India has 38 good companies who manufacture mutual funds, more than 100 companies who manufacture PM. So we have a very good bouquet of services which are already available. So if Jio Financial does not want to take head on, these banks and the Bajaj Finances of the world in loans, it's left with what we call as a distribution business or the payments business. Payments business, we've seen that the best payment companies, the Paytms and the Phone Pays of the world, they are moving to lending because payment in India is not profitable. They are betting everything on lending doing well. So I think Jio Financial Services, the biggest or the golden pot is only if it can crack the lending piece right, because without having a good balance sheet, you cannot do all other fee income related things like an insurance or a mutual fund distribution or so on.
Okay, thank you so much for your time, Digant. We're heading into the market opening, so we'll come back to you later. But for now, here's the first tick on the index. Absolutely quiet for the Nifty, up just about 4 odd points. The mid-cap index is up about 70 odd points. So a flat opening, but now trending into the red for the Bank Nifty, down about 3 points, but nothing alarming really. Suffice to say, it's an absolutely flat opening. What's happening with the gainers? Let's take a look at that first. ICICI Bank, ahead of its numbers on Saturday, is up almost 0.7%. You have Dr. Reddy's, that's in the green, up 0.6%. Divi's Lab. So a lot of these pharma names are doing well. Bajaj Finserv is trending in the green now, up almost 0.5%. LTI Mindtree is also up about 0.3%. And Sun Pharma is up about 0.2%. So these are the list of gainers. On the losing end, it's IT, HCL Tech, Infosys are in the red right now. A tad bit really. TCS as well, trending lower. And something like a Hero MotoCorp from the auto space down about 0.5%. Apollo Hospitals, Axis Bank just trending in the red at the moment. Nothing alarming. But for now, very quiet for the headline index. It's the mid-cap index that's starting to surge now. So L&T Finance Holdings is one of the big movers, 3% higher on that. Reliance Industries, by the way, let's just see where that rate is settling as of now. Reliance Industries will come up for you on your screen in a bit. We'll get to that. But for now, very, very quiet for the Nifty, absolutely flat. The mid-cap index is doing a better job, actually, up almost about 65 odd points. Canfin Homes, despite the, NII profits being above estimates, Canfin Homes is sulking just a tad bit, but there's plenty of action in the broader
market.
Well,
that's right. Canfin Homes went into these earnings with a gain of 2.5%, so it's giving some part of that. But as Sonia mentioned, those numbers are quite good. What's losing out today is Shree Cement. They've got a letter from the Ministry of Corporate Affairs. Remember, our team had told you that this was likely to happen. And now they've confirmed that. So the stock did take a bit of a downtick. And now, in fact, it's reacting to this news flow overnight. So it's down close to 2.5%. We'll be waiting to see what's the outcome of that income tax survey that was conducted on the company. Amara Raja as well is down close to around 1% to kickstart things. What's doing well? L&T Finance Holdings, those numbers look quite good. The stock is up close to around 1.5%. Your Federal Bank, well, they've gone ahead with their fundraising plans and they've raised their required capital. Stock opens up with a gain of close to 100%. Concord, earlier the exchange said that it will be excluded from the F&O trading. Now they're saying they're reversing that decision, so it'll continue to trade in F&O. So that stock's up close to around 1% odd. Union Bank, I'm not sure what's going on there, but that stock is building on volumes, and that's up close to around 3%. For the time being, the Nifty is down close to around 20 points, but you need to keep in mind that the star performer for the last few days has been Reliance Industries. So in that sense, the star batsman is not participating for the first time. We'll get a better rate at around 9:45 to around 10 a.m. odd. Prashant.
Okay, well, market breadth is pretty strong. It's just, 2 minutes of the market, and things are looking quite good. 2:1, over 2:1 is what the advanced decline ratio is now at. Just a few names. Look at something like straight off the bat. I mean, this is not the first stock that I would mention when we start to address open, but Premier Explosives. There's been an explosion higher on Premier Explosives. Day before yesterday, it saw a bit of a profit taking, but just a one-way move. Yesterday, I think, was up 10%. Today, it starts about 4% higher. And it's got volumes, and that's why I'm kind of mentioning it right off. Look at Titagarh. Titagarh had a big day yesterday. Vivek highlighted that HSBC note on Titagarh. Stocks up another 5% this morning, 622, 623. Again, a one-way kind of move. There is TV18 Broadcast, which was up 10% yesterday. It's up another 2% this morning. Again, it's got volumes. We've got Newgen, which reported numbers during market hours yesterday, 4.5% on top of the gains that we saw in trade, yesterday. We got PNC Infra, which is a contractor basically, 7% on PNC Infra, 368 on volumes at this point in the day. So this is quite something. KCP Sugar Industries, I mean, keep an eye on this one. It's up 16%. I mean, it's a small stock, $30, but volumes are not bad for this time as far as the open is concerned. I'll just take a quick look at stuff on the downside. I think Shree we mentioned, Amara Raja we mentioned. Amara Raja has got volumes. It's down 1.25%. There was a big block which happened. Paytm starts slightly lower. I don't know, something has happened on Krishna Diagnostic. That's down 13%. It's got volumes as well, 464 on Krishna Diagnostics. It'll come up on your screen. Okay, I think
Krishna Diagnostics.
That's Krishna Medical. Krishna Diagnostics is the one that I'm talking about. And that is down 13%. Yeah, there you go. Big volumes.
The National Health Mission of Rajasthan has cancelled one letter of acceptance for providing laboratory services for Krishna Diagnostics. So that is down about 13%. The other one that's getting a big knock is transformers and rectifiers. So now down almost 16% on that. It's got a stop deal notice from GETCO, which is the Gujarat Energy Transmission Corporation. They don't want to deal with the company for a period of 3 years. There are some allegations made. So that's down almost 18%. Not looking good at the moment. So these are two stocks that are seeing some double-digit losses. Otherwise, for the market overall, I mean, it's now actually starting to trend in the red. So 40 points lower for the Nifty now.
And with 49 stocks trading. Right?
Yeah. The star batsman's not yet there.
Is not in, and that'll join the crease at 10 o'clock, 10 this morning. Let's actually take a quick look at where where Reliance is at in its own price discovery session for a quick bit, and then we'll move on. Well, it's down 4.6, so 130 rupee difference. 27.07. No, there's still time. We're still in the first half of this price discovery session for Reliance X Jio Financial Services. Tata Communication is up 1.5%. Started in the red. Numbers are in line to slightly subdued, but the stock's now recovered. It's up 1.5 at about 16.40 or so. Ashwini Agarwal is with us, founder and partner at Demeter Advisors. Ashwini, good to have you with us here. Thank you very much for your time. Let's just start with what you make of Jio Financial Services. We had an analyst earlier with us who was saying, well, it'll take time, and it's not going to. The impact on the rest of the listed universe is not going to be immediate. But how are you thinking about this event?
Prashant, the way I think about it is that, your previous guest, his comments were quite astute in the sense that the lending business is the key to Jio Financial Services. And my sense is that there's a huge opportunity there in terms of how large the the below prime market is. I wouldn't call it subprime, that has a negative connotation, but the entire mass of borrowers which are just below the prime borrowers. And we've seen a lot of these small finance banks and home finance companies. You spoke earlier about Canfin Homes results. You look at a lot of lenders and the borrowing ability and the opportunity to borrow for the middle class, for small and medium-sized borrowers in India is still quite large, and it's reasonably underserved, at least in the near term. So if Jio Financial Services can make a go of that, it will be good. And I'm not sure if in the near term it has a very large competitive impact on the industry, because I think the market is large enough for everyone. Having said that, for some of the larger players, obviously it's a moment to reflect and see, because there is a large competitor that has emerged, and they will be looking to see what they do. So I think interesting times, but I wouldn't be too worried in the near term.
Okay, not too worried in the near term for a player like Bajaj Finance, but definitely wait and watch mode as a big player enters the market, right? The financial services space. Got that. By the way, just a couple of more stocks. Polycab continues to hit new highs, so it's once again up about 1.5%. And this entire theme, the home improvement theme, whether it's cables and wires or even ceramics, have been doing very well. So Kajaria Ceramics, for example, is at a fresh 52-week high this morning, up 3.5%, and that stock is up 30% this year already. Ashwini, hi, good morning and thanks for joining in.
Morning.
How are you feeling about the market at this juncture? Do you think that this is just the start of a multi-year upcycle for the Indian markets, or do you think that a lot of the good news is already in the price?
Surya, it's a great question, because we've at least in the 32 years that I've been here in the markets, I have not seen a confluence of positive factors like what we are seeing now. It does feel that we are in for a multi-year economic expansion cycle. Now, has the market significantly discounted a lot of the positives in the near term? That's possible. But if investors are willing to look out 2 years, 3 years, 5 years, I think there is more upside than downside. So, even if you look back at the cycle that we had between 2003 to 2007, each year we saw corrections which were somewhere in the region of 10% to 20% at the index level. So, these kind of cuts can happen, and these can come from global developments. It can come from local developments which have nothing to do with the economy. These could be politics. It could be, something else that we can't predict. But the point that I'm trying to make is that it's going to be a positive outlook for the economy for the next 3 to 5 years, and investors would do well to just stay invested and ride out the volatility that is inherent to stock markets.
All right. Hi, Mr. Agarwal. Good morning. What's your view on IT? The numbers were pretty much in line. Some of them were misses, actually, but clearly not as bad as what the street was estimating. Now, there are still challenges going ahead, going by the global headwinds that could lie ahead in FY24. Is this bounce providing a good opportunity actually to lighten your position over here? Or do you think that you would continue to hold positions or maybe make a fresh entry as well into IT stocks?
Nigel, great question. I've been quite flummoxed by the kind of strength that we've seen in the IT names, especially after the disappointments from all the majors. I was sniffing at this sector, as I'd mentioned in our earlier conversations, between April and June, but decided to stay away, thinking that, the June results might offer an opportunity, because I expected them to be weak. So they were weak, as we saw. But the issue seems to be that the US narrative has now changed to one of a soft landing, and rates trajectory that to, one and done, which is obviously providing some tailwind to the IT sector. In addition to that, foreign investment flows is what's driving the market, and relative valuations being attractive, relative underperformance being in place, and relatively high familiarity for IT names for large foreign investors is the reason why these stocks have done so well. Having said that, the mid caps actually are doing all right. I mean, a couple of the mid cap names that reported yesterday have actually done quite well. So, the narrative that we saw over the last quarter, where the mid caps actually didn't correct as much as the large caps, seems to tell a story that the mid caps are actually doing quite well. But in the large cap space, honestly, the rally flummoxes me. I was hoping to purchase IT large caps into the correction that I had expected post the results, but that hasn't happened, so I'll stay out for now.
Ashwini, slightly open-ended question in terms of how your view has evolved for newer opportunities where one can put in fresh money.
Prashant, nothing very different. I continue to be fairly positive about the financials and the banks, which has been a big consensus trade, but I'd like to move down the market cap curve there, because I think the overall environment is quite benign. So that's one place where I'm looking for opportunities. The other place is in the whole mid and small cap space, where I think the valuations are still quite reasonable. Yes, you have pockets of exuberance and valuations being stretched, but there are a lot of places where I still find valuations in the early teens, return on capital employed, in mid-teens or high teens, and a pretty decent growth outlook over the next 3 to 5 years. So, mid and small continue to be very attractive, notwithstanding the kind of outperformance that we've seen over the last 1 quarter or so at the index level, and some really stellar stock market returns from individual stock prices. So that's one area that I'm continuing to sniff at. But also, among the large banks which have significantly underperformed, my sense is that, for those that are feeling slightly jittery and, don't want to adventure into the small and mid cap space, I think the large banks also offer an opportunity where you can make a 15% compounded return over the next 3 years, from here, which is not a bad return if you think about it. Not making any aggressive assumptions on valuation expansion, just trying to capture the earnings growth. So, there are a lot of places to pick and choose. Very, very interesting market to be in.
Okay, all right, Mr. Agarwal, thanks so much for stopping by and giving us a view on the markets. Look forward to having a chat with you soon. But for the time being, wishing you a good day ahead. Well, let's move on then and let's get our first corporate on the show. Hudson Agro, well, those numbers look quite good. Operationally, at least, in the first quarter, the gross margins improved while other expenditure was lower. That's what helped the EBITDA number. Mr. Chandra Mugan, Chairman of Hudson Agro Products, joins us on the show. Hi, sir. Good morning. Well, you've grown by mid-single digits for the past quarter. Could you break it up for us between volumes as well as pricing? How did both of them fare? And also, earlier you had told us that for the year, you're looking at double-digit revenue growth. Is that still on the cards for FY24?
See, this particular quarter, compared to the earlier year, same quarter, we had shortage of milk. So we have curtailed our business on the commodity where we sell. Almost 200 crores turnover that was possible, we couldn't do it. And we focused on consumer businesses and we left out commodity. Hence, the revenue has been less. We should have done 200 crores more subject to availability of milk. And last year, completely, there was a crisis of availability of milk. So we focused on this. Going forward, the milk situation is improving this quarter. And I believe things will start improving. But again, commodity business may take little more time for us to get it. We may get into double digit with difficulty.
Double-digit growth for the year is something that you continue to maintain, right?
That's right.
All right. And also, could you tell us, just since we're focusing on the top line, what was the contribution coming in from the ice cream business?
No, it is all businesses have contributed. It's not anything singular that has contributed.
No, we wanted to know, sir, the contribution particularly from the ice cream business, because I think that has a little better margins.
It is not the case. Actually, the ice cream, curd, both are doing extremely well. And milk is also doing well. It is not that any specific business has given return. It has been a general performance. Even milk has been good. No issue for us. Only we suffered is on the commodity, not on anything else.
Okay. Mr. Chandramogan, good morning and thanks for joining in. Can you tell me exactly what was the volume growth in the quarter gone by in Q1 and what was the price growth that you saw? And on volumes, particularly by the end of FY24, what are you targeting?
See, volume has grown in all the branded segment, but in the commodity, we have lost out. Going forward, 24th, double-digit growth will be automatically coming in this quarter itself. And third, fourth quarter, we expect the double-digit growth to be little better because we may again get into commodity with excess milk. Right now, the milk supply is better than last year milk supply. This is the situation.
Okay, so when you say double-digit growth, are you talking about high teens, low teens, if you can give us any indication? And also on the margin front, what are you targeting? Do you think 12 to 13% margins is something that you can do?
Right now, we have just come out of all the turbulence and let me settle down before committing any margin. But we are sure that this margin, whatever we are maintaining, it can only be better and not less as such.
Got that. Sir, could you talk to us a little bit about the non-South geographies and how they've been doing, a little bit about distribution, any new markets you've gotten into?
See, earlier probably Tamil Nadu used to be about 65% to 70% of our business. Last 4 years, gradually it has been coming down. And right now we can say that Tamil Nadu contributes 50% and the rest of the 50% comes from other states where we have entered earlier. Gradually, the volumes are picking up. And today, in the south geography, we are actually having 50% from Tamil Nadu. Rest of it is coming from rest of Tamil Nadu and Maharashtra.
Okay, all right. When you joined us the last time around, we had asked you with the kind of investments you have made. Your fixed assets has continuously been increasing over the last few years. The growth, it braces you up for good growth in the coming years. You said 10,000 crores is possible in terms of revenues. By when will you hit that mark?
I don't want to indicate any time frame and get into that. And we are gradually going on, and we are confident that 10,000, we have capacity almost, except for the balancing machines. We don't know when COVID will attack or some other economical recession. We are going on the right.
At current reckoning, sir, with the current setup, if there is something untoward that comes about, then obviously we'll have to, reassess it. But do you think that this year you're going to grow in double digits? You're very certain about that?
This year we will grow definitely in double digit.
Right. So do you think by FY25 we should see that 10,000 crore mark in terms of revenues?
I don't want to commit anything on that type of rate.
Okay. So, you also have a debt of almost 1,500 crores on your books as of March. You've, I think, gotten approval to sell one of your assets, the sale of the windmills of the company, for a consideration of 135 crores. Will this be pumped in to reduce debt, and any more assets that you're looking to sell?
No. There is no asset for sale except the windmill. Actually, the windmill, we had a different issue. Our requirement of power has been gradually increasing every year with ice cream, curd and all that. Our problem was April and May, there is no wind season to generate power and give it to us. So we were also not having the reserves in the month of February, March itself. So we decided to go for solar, which suits. When the requirement increases, solar power also increases with the summer. So we are shifting to solar. We are actually tying up 50 megawatts.
All right. So you're shifting to solar and hence the sale of this windmill. Got that. But on the debt front, any other plans to reduce debt from this 1,500 crores? How much do you think you can bring it down by in the next 1 to 2 years?
I think the next 2 years, my option could be it will be less than 500 crores debt. Because heavy depreciation is available, which is a cash inflow for us. And capacities are mostly built. So the debt could be in 2 years less than 500 crores in my opinion.
Sir, you said that your margins will continue to improve from here. So, going by that, you'll be moving to around 12 to 13% at least of margins that we can work with. Double-digit top-line growth and margins of 12 to 13%, 150 basis points improvement from here?
Depending on probably the future requirements, possibilities are definitely there. But I don't want to commit because we have just come out of all the turbulence. And committing with the present situation is difficult. But moving forward, we are pretty likely to do it.
All right, so we leave it at that. All the best for the future and thanks a lot for joining in. So that's Hatsun Agro. Big move in trade today, 9% higher almost. And the company says they continue to target double-digit growth for FY24. And they're also looking to bring down their debt in a big way. From 1,500 crores currently, they're saying over the next 1 to 2 years, it could come down to about 500 crores. But the G20 finance ministers meet has come to a close. And my colleague Sapna Das spoke exclusively to the Economic Affairs Secretary Ajay Seth on the G20 outcome and the way forward. Listen in to what he had to say.
Considering that the energy and commodity prices are off their peak, but nevertheless, inflation in major economies, especially in advanced countries, continues to be fairly elevated. So as a result, the monetary policy rates and monetary policy stance remains to be restrictive. Inflation policy rates are high, are likely to remain higher, and that creates spillover to other sectors as well. So what kind of a policy coordination is needed among major economies on the monetary policy side? At the same time, how to take care of the spillovers. Then you ask, where does India stand? This was also taken note of. The growth rate in India continues to be robust. Continues to be highest among in the major economies, while and inflation is within the policy band, but there is likely to be, that is more specific to us, considering that at the global level growth rate, overall growth rate, as well as the global trade volumes are going to be subdued. So that will have some impact on the margin on us as well.
All right, well, time to slip into a short break. When we come back, we'll continue our focus on Reliance Jio Financial Services as we get the rough estimate in terms of a pre-year open listing. Stay with us.
Welcome back to Bazaar Morning Call. Well, for the market at the moment, it is very quiet, really. Not too much happening at the moment, just holding on to levels from yesterday. Let's continue to put focus on the Jio Financial price discovery and its demerger from Reliance. We have two gentlemen joining in. Abhizir Devanji, the partner and national leader financial services at EVA India, and Ashwin Parekh, the managing partner at Ashwin Parekh Advisory Services. Gentlemen, morning to both of you. Abhizir, let me start with you. What is the larger implication of Jio Financial Services entry into the industry? I mean, there are a lot of discussions, a lot of narratives on whether this will be disruptive for the industry or not, but it may be too soon to take that call. Your view?
No, absolutely too soon to take that call. But Reliance as a group has been disruptive in most businesses they have entered. We've seen that in retail. We've seen that in Petrochem itself. But we've also seen that now. We will possibly see that now in financial services. The one thing that they do well, and I think they will leverage that well, is on the digital part of things. And really, the world of financial services is headed more towards digital lending. And if Jio is able to leverage their existing digital information and convert that into credit information, which I think they will initially be able to do, because the Reliance ecosystem itself is so large that they will be able to start lending at that. But once they do that and thereafter focus on the larger market and build a analytics database around it, I think Jio will be a disruptor in the financial service industry. The other important thing for them to note is that they have the capital. 125,000 crores of capital is available, which generally NBFCs lack. So, yes.
No, I take your point. I take your point that, they have this existing digital infrastructure which they can leverage easily. And of course, they will do that, going by what they've done in the past with other businesses. But there are a lot of challenges in valuing a company that has a high net worth, but no significant book or present business, right? So they start with, of course, 1 lakh crores. But what can you what is the prognosis on how they could grow?
Oh, so at the moment, I don't think anybody should value it more than the 1 lakh crores or 1,25,000 crores that it has. There's no question. But what will happen, the market will factor in some level of, as the market looks forward, the market would value it at some level of book price, to say maybe 1.5 times book initially. And then see the first 6 months, 8 months as to how the trajectory happens. And if the trajectory is going to come about, then the multiple to book will be larger. I mean, Bajaj Finance is 8 times to 10 times book today. So if there is a trajectory felt that the digital story is playing out and is disrupting the way it is supposed to disrupt, I think there is a big play there. And the market will value it upfront. But not to the extent of a Bajaj Finance, clearly. And it should not.
Okay, all right. Abhishek, I request you to just stay with us for a bit. We have Mr. Ashwin Parekh as well, who's joining us on the show. Hi, Mr. Parekh. Good morning. Tell us, what could the implications be for the financial space with the entry of a player with a very, very good parentage?
Yes, CC, I'll tell you, I mean, there are 2 or 3 things in financial services which are distinctly different, compared to the other industries. One is, of course, the size of the balance sheet. If you're working with a very large size of balance sheet, you can aspire to become a financial conglomerate. With the exception of perhaps a banking license, you could end up doing anything. So that was one. Second is the disruption that you're talking about. Let's say there are different phases of disruption. It's not just disruption. We all agree that in financial services, cost of acquisition is perhaps the most sort of difficult to tackle for a new entrant. Now, in case of Jio, let's say what they have. They already have a huge bandwidth. So payments is something they can really work on. They have customers. So they can really work on the customers, on customer finance segment of, let's say, the financial services. They can really go into insurance eventually. So when it comes to what it can possibly do, I suppose, with a balance sheet size of that nature, I suppose they can look at all segments eventually in a span of a certain period. And they can certainly look at all services except banking. And when the regulations change, then they can even look at that. Now, let me say, in addition to the cost of, let's say, acquisition of customers, there is another important cost. And that cost is to ride over the markets, let's say, during the first 3 or 4 or 5 years. If you expand your book, and then if you find that there is an economic downturn, then it does become a little difficult. So I would say I would wait and watch. I wouldn't take, a bet on how much of, let's say, the valuation would be, or I'll wait for the plans. I'll see what are the sectors in which they are getting into. What is the potential, in those areas. And when it comes to disruption, everything essential for disruption, customer base, technology, acquisition of customers, most important, trust. The brand is, it can bring about a lot of trust, which is so essential in financial services. So I would certainly believe that I would wait for the plans, to be disclosed. As and when they come out with the plans. And then some of the multiples that you talk about, in the financial services at a higher level, that is at the holding company level, they are a function of what they get into. Insurance has a certain set of, life has a certain set of multiples. Same way, lending is a different set of, payments is a different environment altogether, basically.
All right, guys, just want to get our rates. I think the pre-open is just closed. So on the BSE and the NSE, I think those are the rates. The 2589, that's 250 rupees adjusted. And on the other exchange, it's 2580. I think this is the rate that we have got on both the exchanges. So that just closed, I think, in 945 baht. And we've got the rates that come up for you on the screen. So it's a larger than expected number, right?
Yeah, larger than expected because it was up to about, the estimates generally range from between 160 or 200. But this is, I think, the rates which are now finally starting to come through. So the session, the window to put in trades, modify trades, that ended at 9:45, and 9:45 to 9:55. The rest of the stuff will happen at the back end. But I think this is the rate now, which basically means that the discovered price, now the found price, the discovered price for the Reliance X Geo Financial is 2589. Yesterday's close was 2842, which essentially means that Geo Financial Services will be included on the Nifty at 251 rupees per share. And the price will be fixed on the NSE and, of course, the other exchange at the rate that you're seeing, 251 and 261, 262, for the period till when the entity actually lists, Geo Financial actually lists on the exchanges at a future date. So this is how this is going to happen. Trading, you won't be able to buy and sell Geo Financial Services because it's just being included, not quoted on the indices. But Reliance will be available to buy and sell from this price, 2580, from 10 o'clock. And the change will be calculated on this base price, not yesterday's closing price, but the price that you're seeing on Reliance right now will be the base price. And I mean, if it opens up, it'll be calculated. The base will be 2589 on one exchange and around about there on the other exchange as well. Slight difference there on both the NSE and the BSE. But this is what is coming through in terms of this price discovery that we are getting at this point in time. Gentlemen, good morning. Mr. Parekh, if I can come to you. Just in terms of thinking about what Reliance will do with the financial services entity, I guess we'll hear more about it in the AGM as well, which is not very far away now. But they're not a group which does things at a small scale, right? Telecom is a recent example. As an advisor, if you were to let your thoughts run a little while, not too wild, what should we expect really? Should we expect some M&A, some acquisitions, especially in spaces like insurance where there are companies where perhaps those opportunities exist? What else? Lending, of course, is the big money-making part of it. Go on.
So with the balance sheet size of that, your question is so pertinent, so relevant. You see, what would you really want to do? Would you like to really build, things by pieces? or would you like to run as soon as you land? I mean, if you want to run as soon as you land, then I suppose acquisitions will make sense. There are enough number of, let's say, opportunities available in general health, even in mutual fund, I mean, in AMC sort of, industry. So there are those pieces available. I mean, and then as far as, let's say, the other areas are concerned, let's say for payments or acquisition of fintechs, basically, and also becoming a substantially large fintech itself, should not be a big sort of, challenge for. So I would certainly expect in the span of next 1 year, a certain order of acquisition, I mean, M&A activity, and a certain number of. The only thing they would do is, I suppose, not only will they acquire, but they will allow the management of that organization to run it for a certain period with the geo characteristics. So that could make it a more interesting place.
Okay, that's interesting. And they have put a very strong management in place as well, right, for JFS. But Bazaar, I wanted you to come in on this because as Mr. Parekh was also pointing out, they have all the ingredients for success, right? Whether it's the customer base, whether it's technology, whether it's digital infrastructure. But an analyst earlier was pointing out that they will have to go through that grind in terms of a timeline because there are well-entrenched players, not just Bajaj Finance, but others as well in this space. So it may take them at least 2 to 3 years to sort of put a proper business model in place. What are you looking at in terms of a timeline, despite all that they have currently?
Well, I absolutely agree with you. See, for one, they have the capital. And capital, as everybody else knows, can be wasted quite easily in financial services. So I don't think one should be wasting capital immediately. They have 2 or 3 things to do. First is, look at the Reliance ecosystem per se. The whole bunch of suppliers who are MSMEs, who are sitting at the Reliance level, where they can easily give them credit because they've been experiencing them for the last many years. The second is the whole retail proposition with Reliance Retail around to offer consumer credit. The third is to actually look at payments. And I mean payments is the much larger investment space, because when you start doing payments, you start collecting characteristics of people which talk about how they behave in terms of payments. And when you capture those, you actually will convert a lot of payments data to credit data. And I think if they do a 3-year or 4-year systematic data collection process, which enables them on a focused way to convert data into credit data, I think at the end of 3 years, they will be ready for the market at large. And it's the payment vehicle which will enable them, whether it's a payment bank or the aggregator, will enable them to actually build a larger customer base, which is more credit-worthy. Insurance will be a cross-sell product for them, clearly, whether they manufacture or whether they broker. But at least I think the wise way would be to start with something that you're familiar with. Once you gain scale over a period of 1 to 3 years internally, go external. And at that point in time, possibly also look at acquisitions. Acquisitions has to be a means to an end. It can't be an end in itself. And I think that's what the group realizes very well. So I don't think they need advice from people like us. But that's, I think, what they...
That's very modest of you, Bazaar. Thank you very much for joining us. Mr. Parekh, great to have you with us here. And we'll sort of lean on you for more in terms of insights, in terms of what you make out of the journey here with regards to Jio Financial Services. The capital market journey in some sense is, the journey's already started and the process is underway in terms of Reliance building out this financial services entity. Now, for our viewers, at 10 o'clock, you'll be able to trade Reliance Industries ex Jio Financial Services. So remember that. And the base price, as we've been saying, is 25.80. There you go. That's the change, which is coming up on your screen. And, the difference between 25.80 and 26.42, which was yesterday's price, is basically the value for 28.42, beg your pardon, is the value for Jio Financial Services, which will be included but not quoted, will not be tradable on the indices starting 10 o'clock. The F&O contracts for Reliance Industries will also start trading at 10. So just a bunch of things to keep in mind, all of this coming through in the next 5 or 6 minutes of trade. Okay, Canfin Homes is the next company that we are talking to on the back of earnings which came through for the first quarter. They witnessed a seasonal hiccup in asset quality but managed to arrest declining net interest margin trend. Assets under management growth is also come in at what is basically a 7-quarter low. To discuss more on their performance, we have Suresh Srinivasan Iyer, Managing Director and CEO at Canfin Homes. Mr. Iyer, good morning. Good to have you with us here. Thank you very much for your time. If I can begin by asking you, your sanctions growth has basically outpaced what you've disbursed in the quarter. Could you tell us what is the reason behind this, and how do you see both of these trending from here on?
We have actually had a steady sanctions, but disbursements, because we have some, issues in the disbursement, this keeps happening in the normal sub-registrar offices and also some delays keep happening. So last minute, delays can happen. But it has been in line with the expectations, and the growth that we had targeted about 15%, which we had given as a guidance, is what we have sticking to. So we've had a 2,000 crore target that we had set for the quarter. We are just about there in terms of the disbursement.
Okay, so 15% growth in disbursements is what you're looking at. Mr. Srinivasan, good morning. On the AUM side, your AUM growth has been strong for the last many quarters, but this quarter it's come in at 18%, slightly short of the 20% that you're used to for the last many, the preceding quarters. Can you tell us what led to that slight hiccup in terms of AUM growth, and what is the target by the end of the year?
So last year also we had 18% growth in AUM, and we had also projected or given a guidance that we'll have an 18 to 20% growth in AUM. So we are in line with the AUM target of 18 between the 18 to 20% range that we have spoken about. And as you know, the first half of the year is a little subdued compared to the second half. So the pickup will happen in the second half. But our guidance is 18 to 20% in terms of the AUM growth.
All right. Hi, Mr. Iyer. Good morning. This is Nigel on this side. A couple of questions with regard to this 18 to 20% growth. How many branches are you looking to open for this year? I think it was 10 or 15 odd. And do you think that will cut it to get this 18 to 20% growth? Or are you looking at an increase in the ticket size?
Well, we have targeted 15 branches to be opened in this year. And we are on course for that during the year. We've already identified a few branches. So this quarter, we should start seeing the branch openings happening. And in terms of the growth of 18-20%, we are already having this 18 to 20% growth. These branches normally take about a year and a half to start, delivering and reaching the kind of peak business that they normally start achieving. So the benefit of these branch openings that we are doing will come in the following years or in the second half of the year. And as regards the ticket size, yes, we are looking at a slight pickup in ticket size. Although this year it has been almost the same, or almost I would say a little less at 22 lakhs for this quarter, whereas in the last year we had around 24 lakhs as the average ticket size. But that's more of a blip rather than anything else. That's nothing directional or intentional in that sense.
So it can increase to what level? From this 22, it's fallen from 24, 25 to 22. You're saying it could increase a little bit. What could it be?
Yeah, it could be a little more than 25 by the end of the year.
Okay.
Right. Could you talk to us a little bit about the various customer segments and where you're seeing more traction? How's the self-employed customer segment doing for you?
Well, we've not seen much of a change in terms of our, segment or the customer mix. We still have a sizable amount coming from the salaried segment only, but there's been a marginal, pickup from the self-employed segment. But that's more a normal fluctuation that is happening. Nothing major, not even a percentage point that has changed in that sense. So that's the.
Okay. Your ROAs, I just was looking at that. It's a little lower than what we saw same time last year and last quarter. It has been trending lower despite your margins improving. Can you tell us both on NIMs and on ROAs, what is the expectation?
Well, actually, compared to what it was on March, there's been a slight improvement. But yes, compared to the last June quarter, it's definitely what we had presented in June 2022. It's lower because the last year we had the impact of the rate increase, because of which our margins were squeezed during the year. On the asset side, we have an annual reset, whereas on the liability side, all our liabilities get repriced much faster. So because of that, during the entire year last year, when the rates were going up, we had a lagged effect on the asset side, because of which our NIMs and this were coming down. But now we have, now that the rates have stabilized, we have started the improvement or the effect getting seen on the asset side as well. That's why the NIMs on a sequential basis have improved during this quarter.
Yeah, Mr. Iyer, we're just a little short on time. We just wanted to understand, going ahead, these NIMs which have improved, and we have the chart up for you on the screen, it's improved after a few quarters at around 3.5%. Can you hold on to these NIMs? And also ROA, I think earlier you were targeting around 2.2%, right, by the end of this year.
That is correct.
Maintain that?
Correct. Yeah, that is fine. And in fact, we should be able to maintain these NIMs going forward as well.
Okay, well, we'll leave it there. Thanks very much, Mr. Iyer. Appreciate you joining us with that outlook for the business as you see it. Well, we're down 60 points and it's 10 o'clock, which means that we should be starting to get the first rates on Reliance Industries. Yeah, we are getting. Let's have Reliance up, please. There you go. So 2606, 25 rupees higher is the price which is coming through. As we were saying, this is calculated and immediately there is a pickup on the Nifty, of course, as Reliance starts to kick in. We were down 60 points, I think, 60, 62 points. We are down just under 50 points now on the Nifty as Reliance starts to trade. Ex-Geo Financial Services. Look at the volumes in this one picking up. On the left-hand side of your screen is NSE. On the right side, I think, is BSE. And rates are coming up at with a slight uptick, 1% uptick. So Geo Financial Services will stay where it is at the price, and Reliance Industries will now trade based on what the markets want to give it as a value ex Geo Financial Services, which is demerged. So 40 points lower on the Nifty. There is certainly a lift which is coming through as far as the index is concerned. 26. Let's refresh this. I think we've prices are a little higher. The Reliance price on my screen is about 2610. Yeah, at the bottom of the screen, that's the one. 2608. So moving up a little bit, 1.25% higher on top of the price. Mitesh is with us with a quick check on things. Mitesh, hi, good morning. Quite an eventful day with this pre-open on Reliance, and of course all that has happened. What's your sense on the index? Would you buy this dip that we have in our hands, which is getting smaller with the push coming in from RIL now? And in terms of stocks, what would you trade?
We haven't done that. I think, still trying to understand how this RIL adjustment will work out. But I think so. If you're not very clear, I think the good choice is to be on the stocks and look, where action can be happening. And I've identified a few trading calls here. On my list today is Voltas, which I would recommend buying with the stop just below levels of 770 for targets of around 805. And then also is Concord, a container corporation, which is a buy with a stop just below levels of 684 for targets of 715.
Okay, Voltas and Concord, thanks a lot for that. Well, the Geo price has settled at around 262 rupees, which was largely in line with what the grey market premium was. So no real difference compared to what the street was expecting, largely in line with expectations. Geo Financial price at about 262 rupees. Let's do one thing. Let's take a quick break on that note. Thanks a lot, Mitesh, for joining in. Virendra Jeet, who is the CEO of Newgen Software, will join in on the other side to discuss their first quarter earnings. Stay tuned.
Welcome back. Well, we have been focusing on the large cap names, but from the mid cap universe, Newgen Software, that stock is surging in trade after reporting a very, very good set of numbers in the first quarter. In fact, the company is up nearly around 100% in the last 1 year. Their revenue surged close to around 34%. Margins also expanded. The company has been relatively unaffected by the US banking crisis, as more than 60% of their revenues coming from India, as well as Europe and Middle East and Africa. To discuss more about the past quarter and to find out what's the way ahead, we're joined by Mr. Virendra Jeet, the CEO of the company. Hi, Mr. Jeet. Good morning. Thanks so much for joining in. Well, congratulations on a super showing in the past year, in the past quarter, that is quarter one. You've grown by more than 30%. Now, normally you say that you've grown by close to around 20% on a year-to-year basis. Can you do better this year? Can you grow by more than 25% that you grew in FY23?
Good morning, Nigel, and thank you for having me on the show. You're absolutely right. I think this quarter has been pretty strong, and it has been strong on accounts of all markets performing. We had a strong growth in markets like India, Middle East. In fact, even the US was strong for us this quarter. This was predominantly on account of, one is the broad-based growth, and the second is, the license revenue this quarter was very strong. As you know, the business is a bit seasonal, and the Q1 is generally lean on licenses, but this time we had very strong license show. So it has strong performance of roughly around 30% growth. Traditionally we have grown at 20%. You're absolutely right. And I think we have been over years trying to push this growth rate because the addressable market for us is quite wide. And with our foray and investments in mature markets, we are trying to push that growth rate. We are keen to push that high. How high that's going to be right now and this year is still too early. But I do think that we can do a strong Q2 as well, and then Q3, Q4, we'll have to look at how the market unfolds. But, absolutely right. We want to push the growth rates much higher than 20%, which is our traditional growth rate.
Okay, so when you say push the growth rate much higher, is it possible to beat that 25% growth rate that you've seen in one of the earlier years? I mean, do you think that is a possibility in either FY24 or 25?
So I think what we have done last year, we did around 24% growth. And I think we were, in our planning, we were thinking that we should be able to meet the growth rates what we did last year. But, it's too early and we cannot predict it because, a lot of, what's happened, since the bases are very small, when you break the revenue on quarter basis, few deals can make a lot of differences. So we should be cautious not to take them trends of, the whole year. We will be having a strong year, but how strong, I think we'll have to wait and see how the Q3.
Sure. The reason I ask is because earlier you had said that you're aggressively looking at some opportunities both on the organic and on the inorganic side. Do you think there's something that could fructify on the inorganic side in this year, in the next 12 to 18 months, which could help you with that growth target?
So 12 to 18 months, it's quite possible. Right now, we don't have anything on the table to consider very seriously, but we are actively pursuing this. And the idea is to accelerate the mature market penetration for that. And those are the territories where we're looking at some inorganic. But I think we're more excited also on the organic front. The digital lending is doing very well. Our new products in trade are really making good inroads. India ecosystem of banking, our existing accounts are really growing in terms of, the growth in credit and the lending initiatives is done by all these banks. So, I think our traditional businesses are very strong, but to increase the penetration of mature markets and to speed up our go-to-market out there, that's where the inorganic may help. And we are looking at opportunities out there.
Okay, all right. Looking for some concrete numbers, Mr. Jeet. Your DSO days, that's gone up to 126. On a year-on-year basis, it compares with early hundreds. Could you tell us what's the trajectory from year on? What's the number we should look at? And also margins. The last time you joined us, you told us you're looking at around 22%. Do you want to up that a little bit?
Yeah. So on the DSO front, what is happening, on a historical trend, we have a lot of revenue billing has happened in Q4 last year and Q1 this year, which has been substantially much larger than the revenue which we have accumulated. So there is some amount of provisioning done even for 90 days. So that's what has pushed. But as I told you, I think long term, in next 1 to 1.5 years, we should bring it around 100 days on average. That's our goal. On the margin front, what we have said that we should be able to do around 21% of EBITDA, and I think somewhere around between 17-18% of PAT. Now it completely depends on how larger the top line we hit because the costs are pretty linear. But having said that, there is also a need to invest for growth. And I think our whole purpose of, the organization is to make it a very large software company and have established our brand as one of the leaders in products across the world. So we are aggressively looking at opportunities of investing in our R&D, expanding our sales and marketing costs. So, but yes, giving overall our broad goals is to maintain a EBITDA and PAT in the ranges we have controlled. But you're absolutely right. In some years, if the top line grows, but the costs cannot go in the same year at the same level. So there will be some amount of organic expansion of margins.
Just very quickly, if you can tell us, the subscription revenues contributes over 30% to your business. Do you plan to take that higher?
So on an annual basis, our what you call annuity and subscriptions have now annuity revenues have gone up to almost 55, 56. Of course, Q1 they will look much larger because of the overall quarter is smaller. As we are selling more and more software licenses, the nature of business is that the annuity keeps on getting compounded. So our aim is that in next 2-3 years, our subscription should reach around 70-75% of the business. And in that, annuity should reach around 40% of our business. So that's what our focus of business and sales is.
All right, we'll leave it at that. Thanks a lot for joining in. Appreciate your thoughts. That's Newgen Software. Let's slip into a quick break. On the other side, Sumant Katpalia, the MD and CEO of IndusInd Bank, will join in to discuss their numbers.
Welcome back. IndusInd Bank's first quarter numbers are picture perfect. Loan growth at over 21%, best in 4 years. Margins at 4.29. Well, Abhishek tells me it's the best in 8 years, but that's because we don't have data beyond it. It's probably an all-time high. I have with me Sumant Katfalia, Managing Director and CEO of IndusInd Bank. Sumant, good morning, and thank you very much for sparing time for us.
Good morning.
This is a journalist's nightmare because we like to ask tough questions, but it's really tough to see anything difficult over here. So, first, the plain vanilla question. 21% is a very good loan growth. Is this a maintainable pace? Are you seeing enough demand on the ground?
So we do see enough demand specifically in our domains. So if you look at our growth, our vehicle finance unit came in at a very good growth of 21% year on year. I think our microfinance came in at 14%. Our other retail came in at 27%, driven by unsecured as well as merchant acquiring business, which has done very well. And of course, our corporate bank, specifically in the SME and the MSME side, gave a 10% quarter-on-quarter growth. So I think this was broad-based. We believe it's sustainable because we play in those businesses where we have a right to win, and we believe that that's going to drive the growth as we move forward.
Okay. Among the businesses you are best known for is vehicle financing. One almost looks at it almost synonymous with IndusInd. Now, when we spoke to the CV guys, and even when you look at the May and May-June numbers that were announced, there is clearly a downturn, a slowdown. I won't say downturn, slowdown in CV sales. In PVs, compact cars have done actually badly. Only SUVs have done well. And two-wheelers, we all know that everyone's rushing to the 400cc plus because the lower segments are doing badly. So is it going to be a fight there to be able to produce a 20%, 21% loan growth?
So what you will see, we are well diversified in our vehicle finance portfolio. We have 6 categories of vehicles where we play in, and CVs is one of them. You're absolutely right. I think the growth will be tapered to around 8 to 10% this year. And I think if you look at, and that's on the volume side, but if you look at the price variance, that will be another 8 to 9%. And if you're gaining market share, so we're very confident that we will maintain our growth rate at that level because of the price variance, the volume variance, and the gain in market share, all playing together.
I take your point on price variance because even Maruti is telling us SUVs are doing well. The high-priced ones, premiumization is the name of the game. So yes, I take your point on that. But, speaking of claiming market share, we now have a behemoth in HDFC Bank, which is going to aggressively look for deposits. Of course, this quarter they didn't because they had overdone in Q4. But, they have to replace the HDFC maturing liabilities and want to grow their own, 20 lakh crore balance sheet with alacrity. So costs will go up. You think this is the best you can do in margins? Does it get better than 4.29?
So we've always said our margins will be range bound between 4.2 to 4.3. That's been our direction to the market, and I think we believe that that's the right margin in which we will play in. Of course, our cost of deposits are high, and we believe that the cost of deposits will start coming down in Q1 of next year, and you will start seeing the decline in the cost of deposits as we move forward.
Yeah, but that's provided HDFC Bank allows, isn't it? That's something which bankers keep mentioning, keep whispering.
Lata, there has always been competition.
Right.
Every bank will have their own unique strategies to garner deposits. If you think that we copy the big banks, I think our cost to income ratios will fall flat. So we have to do things differently. And if you would look at our affluent business, the NRI business, I think we are gaining market share. Our home markets, we've gained market share. So we play in different markets, we play in different segments and gain market share on those segments.
Okay. No, fair enough. It's just that, because it's a big player, second largest bank, it has an impact on the industry itself, which is what bankers worry about. The other point is, can you tell me what is your fixed to floating loan percentage? How much of the loan is floating?
So 48% of our book is floating and 52% of our book is fixed.
Okay. Now, in a context where Reserve Bank rate hikes have peaked, this might work to a disadvantage in terms of you not being able to price your loans higher and therefore a pressure on margins?
See, I've been hearing this discussion on pressure on margins for the last 6 quarters. And if you go back and see our margins, it's been very consistent between 4.25 to 4. The beauty about our book is it's self-balancing. And now the retail book, if the cost of deposits go down, the retail book will start giving higher margins because we book the loans at a higher yield at this point of time on the fixed rate book.
Okay.
And that will start playing out.
Yeah, your 52% will certainly come to your help. Of fixed rate loans. Sumant, yes. There have been repeated warnings from the Reserve Bank on unsecured loan book, and just recently there was a CRISIL press release, CIBIL press release, which was indicating some pressure with credit card loans. Of course, this is a dated report. It dates to the period ending March 31. But still, if the trend has continued, there is a problem with unsecured loans, and Reserve Bank is sent out those letters to NBFCs and banks. Do you think that we should worry about what is growing very well for you, unsecured loans?
It's look at the business. While the percentage growth may be higher, the unsecured, which is non-MFI book, is only 5% of our book, which is credit cards and PL combined. So we've always been static on that growth. Of course, we were 4.2% and we've gone to 4.8 or 5%. But that's where it will be. So we have always been consistent in our commentary that because we have an MFI book, which is at least 12 to 13% of our book, our unsecured businesses other than MFI will be 5% of our book. And that's where we are on this book. So we don't have such a big exposure on cards and PL as what the market seems to be because we are not growing that book very rapidly. When you see a percentage growth, it is coming from a very small base and that's why you see the percentage growth.
Okay. How are you looking at the year ahead, the next 3 quarters? What are likely to be the growth levers for you? And for that matter, even profit levers?
So I think there are 3 levers which will drive our growth. One is, of course, the loan growth. And we've always said our loan growth will be in the range of 18 to 23%. Our domains are coming from cyclical lows. And we believe our domains will continue to give us growth. We've not grown our microfinance book last quarter. And you will see that growth coming back this quarter. New additions of products which we've added will also give us growth, like merchant acquiring business, mortgage business. And I think you will start seeing that growth. Number 2, I think our cost of deposits will start tapering down. I think from Q3 onwards, you will start seeing a smaller decline in the cost of deposit. But by Q4 of this financial year, you will start seeing, and that will start increasing the margin. And the rest we've said is our credit cost will be between 110 to 130 basis points. So we still have a way to go. We are at 132. We should be at 110 to 130. And of course, the operating leverage, which is the cost to income ratio, will settle down at 45% for this year against 45.6 which we provide. So if you look at it, we're heading towards a 2% ROA business. And those are the levers which will play for us.
Yeah, and you are carrying a contingency buffer as well. So I guess there is still some elbow room for a lower credit cost. Sumant, this is more an industry question as a bank, as a veteran in the sector. Do you see major disruption because of Geo Finance on the one hand? It's coming possibly with a 5 lakh crore ability to lend, a 1 lakh crore net worth. I mean, all this is just looking at the kind of capital they have. Is that likely to be disruptive and, push down the rates undercutting possible?
So competition is always healthy. It depends on which segments you are playing. I've always said lending business is not a prepaid business, it's a postpaid business. You have to collect what you lend. So I think every lender has understood that while it is easy to grow the book, the balancing of the portfolio and the quality of the portfolio is what sustains the business.
Sumant, I'm really sorry I have to I'm sorry I have to interrupt you.
Yeah.
The Prime Minister is speaking ahead of the monsoon session.
और इसलिए सावन की अवधि भी जरा ज्यादा है और सावन मास पवित्र संकल्प के लिए, पवित्र कार्यों के लिए बहुत ही उत्तम माना जाता है। और जब लोकतंत्र के मंदिर में इस सावन के पवित्र मास में मिल रहे हैं तो ये लोकतंत्र का मंदिर ऐसे अनेक पवित्र कार्य करने के लिए इससे बड़ा उत्तम अवसर नहीं हो सकता है। इससे बड़ा उत्तम अवसर नहीं हो सकता है। मुझे विश्वास है कि सभी माननीय सांसद मिलकर के इस सत्र का जनहित में सर्वाधिक उपयोग करेंगे। संसद की जो जिम्मेवारी है और संसद में हर सांसद की जो जिम्मेवारी है, ऐसे अनेक कानूनों का बनाना, उसकी विस्तार से चर्चा करना बहुत ही आवश्यक है। और चर्चा जितनी ज्यादा होती है, चर्चा जितनी ज्यादा पैनी होती है, उतना जनहित में दूरगामी परिणाम देने वाले अच्छे निर्णय होते हैं। सदन में जो माननीय सांसद आते हैं वो धरती से जुड़े हुए होते हैं, जनता के दुख दर्द को समझने वाले होते हैं। और इसलिए जब चर्चा होती है तो उनकी तरफ से जो विचार आते हैं वो जड़ों से जुड़े हुए विचार आते हैं। और इसलिए चर्चा तो समृद्ध होती है, निर्णय भी सशक्त होते हैं, परिणामकारी होते हैं। और इसलिए मैं सभी राजनीतिक दलों को, सभी माननीय सांसदों को इस सत्र का भरपूर उपयोग करके जनहित के कामों को हम आगे बढ़ाएं। ये सत्र अनेक रूप से महत्व का भी है, क्योंकि इस सत्र में जो बिल लाए जा रहे हैं वो सीधे सीधे जनता के हितों से जुड़े हुए हैं। हमारी युवा पीढ़ी जो पूरी तरह डिजिटल वर्ल्ड के साथ एक प्रकार से नेतृत्व कर रही है, उस समय डेटा प्रोटेक्शन बिल देश के हर नागरिक को एक नया विश्वास देने वाला बिल है और विश्व में भारत की प्रतिष्ठा बढ़ाने वाला बिल है। उसी प्रकार से नेशनल रिसर्च फाउंडेशन, ये बिल एनआरएफ नई शिक्षा नीति के संदर्भ में एक बहुत बड़ा अहम कदम है और इसका उपयोग अनुसंधान को बल देना, इनोवेशन को बल देना, रिसर्च को बल देना और हमारी युवा पीढ़ी जो विश्व के अंदर नए उपक्रमों के द्वारा विश्व का नेतृत्व करने का सामर्थ्य रखती है, उनके लिए बड़ा अवसर देकर के आ रही है। जनविश्वास बिल सामान्य मानवीय के प्रति भरोसा करना, अनेक कानूनों को डिक्रिमिनलाइज करना, इस मुहिम को आगे बढ़ाने वाला ये बिल, उसी प्रकार से जो पुराने कानून है उनको खत्म करने के लिए भी एक बिल में प्रावधान किया जा रहा है। हमारे यहां सदियों से एक परंपरा रही है कि जब विवाद हो तो संवाद से सुलझाया जाए। मीडिएशन की परंपरा हमारे देश की बहुत सदियों पुरानी है, उसको अब कानूनी आधार देते हुए मीडिएशन बिल लाने की दिशा में इस सत्र का बहुत बड़ा उपयोग है, जो अनेक विवादों से सामान्य मानवीय से लेकर के असामान्य संजोगों को भी मिल बैठ करके सुलझाने का एक मजबूत नींव बनाएगा। इसी प्रकार से डेंटल मिशन को लेकर के एक बिल जो हमारे डेंटल कॉलेजेस के लेकर मेडिकल के छात्रों के लिए एक नई व्यवस्था को आकार देगा। ऐसे अनेक महत्वपूर्ण बिल इस बार इस सत्र में संसद में आ रहे हैं। तब ये जनहित के हैं, ये युवा हित के हैं, ये भारत के उज्जवल भविष्य के लिए हैं। मुझे विश्वास है कि सदन में गंभीरतापूर्वक इन बिलों पर चर्चा करके हम बहुत तेजी से राष्ट्रहित के महत्वपूर्ण कदमों को आगे बढ़ाएंगे। साथियों, आज जब मैं आपके बीच आया हूं, इस लोकतंत्र के मंदिर के पास खड़ा हूं, तब मेरा हृदय पीड़ा से भरा हुआ है, क्रोध से भरा हुआ है। मणिपुर की जो घटना सामने आई है, किसी भी सभ्य समाज के लिए ये शर्मसार करने वाली घटना है। पाप करने वाले, गुनाह करने वाले कितने हैं, कौन है, वो अपनी जगह पे है, लेकिन बेइज्जती पूरे देश की हो रही है। 140 करोड़ देशवासियों को शर्मसार होना पड़ रहा है। मैं सभी मुख्यमंत्रियों से आग्रह करता हूं कि वे अपने राज्य में कानून व्यवस्था को और मजबूत करें, खास करके हमारी माताओं बहनों की रक्षा के लिए कठोर से कठोर कदम उठाएं। घटना चाहे राजस्थान की हो, घटना चाहे छत्तीसगढ़ की हो, घटना चाहे मणिपुर की हो, इस देश में, हिंदुस्तान के किसी भी कोने में, किसी भी की राज्य सरकार में राजनीतिक वाद विवाद से ऊपर उठ करके कानून व्यवस्था का महात्म्य, नारी का सम्मान, और मैं देशवासियों को विश्वास दिलाना चाहता हूं, किसी भी गुनहगार को बख्शा नहीं जाएगा। कानून अपनी पूरी शक्ति से, पूरी सख्ती से एक के बाद एक कदम उठाएगा। मणिपुर की इन बेटियों के साथ जो हुआ है, इसको कभी माफ नहीं किया जा सकता है। बहुत बहुत धन्यवाद दोस्तों।
All right, touched on all the important things, data protection, but I think, yes, he has forestalled criticism or uproar on the Manipur issue. That clearly will take a lot of time of the House. The Delhi ordinance, he didn't mention about that. That will be converted into a bill. There can be some rancor on that. But I think the more important bills the Prime Minister genuinely mentioned, and decriminalization, very important, what is called the Jan Vishwas bill. We'll hear more about that, but Sumant has very patiently waited by. Sumant, apologies if we can't compete with the Prime Minister, can we? We had to cut it over there. The one thing I wanted to ask you, the market is very kind to those who are seeking capital now. We just saw federal raising. You're well capitalized, but would you still want to dip in and take advantage of a kind market?
I don't know. I think if you look at what our risk weights are and the way they're going, we've actually increased our capital over the last quarters because our risk weights have gone down. And I think as long as we do that, and as long as our internal accruals are enough to take care of the profitability, it is better that we don't raise capital. If we have an opportunity where we see an acquisition opportunity or an inorganic opportunity which actually adds a fourth domain, then we will go to the market at the right time. But today, I don't see that need of raising the capital as of now.
Will that acquisition, your sights be? Is it NBFC? Is it anything?
Can't comment on it, Lata. That's very confidential. But whenever we've done an acquisition, three principles play. It has to be ROE accretive. It has to be complementary to our portfolios which we have. So we have 2 domains or 3 domains. It has to be complementary to that. Or it introduces a new line of business which we want to be in.
All right. Fair enough. Unfortunately, out of time. Thank you very much, Sumant, for your patience. Sumant forestalled some of my questions. I'm all going to ask about the risk weight assets going down. Clearly, that's giving them more capital, and they will look for capital if they look for acquisitions. That's a very big takeaway from this interview. Wrap up on Bazaar, an extended one. Apologies to the Chartbusters team. It's coming up for you in just a minute.